looking at it.
There are various different ways.
Hey, hey, hey guys, what's up? Howdy how? Let's pause the music for now. How's everyone doing today? Welcome, welcome. Welcome back, guys. Hello, hello, Chia Pet, Freckly Rage, hello, hello. Let my data drop, thank you so much. Hey, Radic, what's up, guys? I gotta work today, but, wanted to kind of like just chill, watch some stuff with you guys, chat and whatnot.
Be here. At our crypto conference this past week, we had around 15 companies and protocols come on. And that was the question top of the mind for investors, and it was also what we heard from the companies that presented themselves. So most felt that we're going to see regulation come into focus. We're going to see more regulation. But I would say most of the companies that presented emphasized that they believe that regulation, at least here in the U.S.,
we're listening to some.
The road. We'll get some clarity there, but it won't necessarily be so restrictive as to drive innovation outside the U.S. So I think that's sort of the way these companies are positioning right now, whether they're private, whether it's some of the public ones, or even some of the DeFi ones, the decentralized ones. I think they're anticipating kind of a more middle-of-the-road regulatory policy, but definitely that we will see some more regulation.
Just kind of listening to some crypto news.
One of Cuban's points was that stablecoins might be first in line in terms of the spanking machine. Do you think that makes sense?
Look, I think, stable coins and DeFi are both areas that regulators have called out and drawn a focus on. But I think it is important to differentiate some of the offshore stable coins, which have had more regulatory focus than some of the onshore ones that are US based, that do follow a little bit more of a regulatory compliant manner. So I do think there's differentiation enough in these stablecoin markets that I don't know if we could just look at them all the same and say we're going to see a big clampdown on all of them, because they do follow different regulatory procedures. And so there might be certain ones which you see regulators go after a little bit more than other ones which have been, for the most part, following some more of these regulatory procedures that have come out.
In terms of investing opportunities, there's been a lot of chatter about sort of technical resistance on the big names like Bitcoin. There's a lot of talk that they're losing share to some of the alternative coins. Is it the general sense where you are that the lesser known coins have more upside at this point?
It certainly feels that way, right? So the last 2 months, you saw a real run in altcoin markets. A lot of layer ones that were competing with Ethereum have done very well in terms of just price appreciation for the token. So you are starting to see a lot more investment flow down the stack into some of these smaller altcoins. And that's kind of what we saw with the conference as well, whether it was companies that facilitate lending, companies that do trading, institutional over-the-counter trading. You are starting to see not only just retail folks, but also institutional investors start looking at some of the altcoins, start moving away from just Bitcoin and Ethereum. Now, obviously, Bitcoin and Ethereum are still some of the most traded crypto assets out there, but you are seeing some of that share slip as some of these institutional investors get comfortable with some of these other use cases, other platforms, and basically as they just keep digging deeper and deeper into the ecosystem, there's other opportunities that start looking attractive and start looking interesting to them. And then with just improvement in liquidity across the ecosystem, as more liquidity providers have entered the space, you are starting to see a little bit more liquidity in those altcoins than you saw, 10 months ago or a year ago. So it is also making that side a little bit easier for institutions to get involved in some of those smaller altcoins.
Okay, so you can buy the coins, you can trade the contracts. There's also the, other opportunities, right? Whether it is buying stocks that are affiliated or associated with Bitcoin or some of these other cryptocurrencies, whether it's a Coinbase or a MicroStrategy or on down the list, or the ETNs. Looking at the broader emerging industry here and infrastructure, where do you see the greatest opportunities?
Yeah, look, it depends on what a fund's mandates are and in what areas they're looking to get exposure to. But, we cover Coinbase. We have a $420 price target on the stock. We think Coinbase is still a very interesting opportunity in the equity markets. If you want to get exposure outside of equity and you actually want to own the tokens, right, there's interesting opportunities in there as well. You could look at layer ones that potentially could be the next Ethereum. There's probably value there. Even though there's regulation concerns within DeFi, there's opportunities within DeFi, right? So I think those areas, the layer one competitors with Ethereum and DeFi assets are going to continue to be interesting.
What's up, everyone? Thank you for the raid. Close off. Thank you. Hey, Reddick. What's up, everyone? Damien, what's up? Thank you for the follow.
Looking to move into
hello, guys.
As well. So there's definitely some greenfield opportunities for these exchanges to move into, and we're constructive on that.
We continue to keep an eye on cryptocurrencies as we close out the week. It's been a pretty strong week for the major cryptocurrencies, even as disputes over new regulation out of DC for digital assets looms over the industry. So how are investors approaching the asset class? Well, Yoni Assia, founder and CEO of trading platform eToro, joins us now. Yoni, great to have you back on the show. And just given the fact that we do have Bitcoin back above 46,000 this week, Ether back above 3,200 as well, even as there is all of this regulatory uncertainty out there, including here in the U.S., as we see that infrastructure bill with that questionable, or I guess I should say,
can't wait for Cardano's summit, for real, dude.
Definition of a broker in the House right now. How do you see it? How do you see this
I'm
regulation
so
taking shape, and what does it mean for the asset class?
Dude, look at the fucking smart contracts with
First of all, it's
Cardano.
great coming back, and it's great
It's
to
insane.
see crypto coming back as well. Just 2 weeks ago, everybody was asking, are we in crypto winter? I think right now it's very clear we're not in crypto winter. And I think in general, regulations and the recent infrastructure bill dialogue has raised significant awareness around the mainstream adoption of cryptocurrency, which generally is a very good thing. Because eToro is a global company, we have 22 million registered users from 100 different countries. We're able to also see different regulators in different countries and how basically they approach the cryptocurrency industry. In general, obviously, as crypto are getting more mainstream, regulators need to
slowly but surely.
They need to protect customers. That's their role. I think generally what's important is that we have regulations that really understand the technology and that promote innovation, because we are seeing mind-blowing innovation within the crypto and blockchain industry, and we need to make sure that new regulations don't basically block this industry from progressing to where it needs to progress.
I realize that this is still a moving target right now, but just in terms of what that regulation looks like in the U.S., again, as part of this infrastructure package, does it accomplish that?
Hello, Armaban, what's up?
I think, again, the original language, there has been a lot of debate around it. There's a lot of misunderstanding, I think, of decentralization. You can't really regulate Bitcoin as Bitcoin, right? Because it's decentralized. By definition, when something is decentralized, it's impossible to regulate it because you can only regulate it centralized entities. So again, there's the gatekeepers, right? The financial institutions, you can regulate that. And obviously what they've been trying to do is to expand the definition to capture potentially software developers, miners, hardware, wallet manufacturers. And I think generally that does hurt innovation. Software developers should develop software. They shouldn't necessarily deal with transaction monitoring or reporting. So I think the definitions there are, and the nuances of how to define it is really what's important. But again, we see this all around the world. Regulators, are trying to do what they think is best. They don't necessarily understand the technology or what is the best way to get to the point.
Yeah, and certainly it's complicated. It's been a really interesting couple of weeks for public investors.
Bitcoin, red or green?
Whether it's Robinhood going public and everything we've seen happen in that stuff, whether it's Coinbase with earnings earlier this week as well. Volatility still continues to be the word that gets used and is in play for the companies that have any kind of touch or exposure to cryptocurrencies.
We're green right now, guys. It's green.
First of all, volatility is probably here to stay. There's no gravity with interest rates being zero. There's no gravity in the market. So we've seen crypto falling down 50% from May to July, and now crypto up 50% from mid-July to now. So I think volatility is here to stay, and everything that's related to crypto by definition will be, sort of a proxy to that volatility. At eToro, every time we see a crypto rally like we're seeing right now, obviously that has a direct impact on the level of customer interest worldwide that are interested in crypto. So retail investors usually react very quickly to price movements, to upward price movements, and they start buying when the markets are starting to go higher.
So Yoni, very quickly, when is your SPAC merger going to close and eToro become public?
As we announced the SPAC back in March, we said we expected the Q3 closing, and we
hello JLC, what's up, guys?
The plan.
Inflows into crypto remain strong, says Bitwise CIO.
Flatline today for Bitcoin. Obviously, major correction. We're seeing volumes, at least as we can measure them in terms of transactions, having ebbed a little bit.
What's up, Lauren?
This year. What are you
Fuxler?
seeing
Welcome
in
back.
terms of customer interest, demand, has the fever broken?
I don't think the fever's broken at all, at least for the customers that Bitwise serves. We focus on the financial advisor market, and that market is making a 2 to 5 year move into crypto. Our inflows have continued to be strong. I think what's going on in the market right now is we're going through a brief period of uncertainty. There's an expectation that there'll be new regulations. We're dealing with Bitcoin mining moving out of China. The important thing about those two pieces of news is while they're short-term introducers of volatility, they're long-term good for the crypto market. So I think this is a pause that refreshes, and that's what we're hearing from our investors.
Yeah, I mean, it makes sense that there is a certain core of investors, retail and institutional, that feel as if they want to have a long-term allocation to this as an asset class, call it digital gold, whatever it is. But you have to expect that a lot of the people from late last year into early this year, when we went up by multiples in terms of Bitcoin price and other coins going up even more, that a lot of people were buying because it was going up.
That's definitely true. And you get a lot of people chasing short-term momentum. I think the important thing for viewers to remember is that this is a long-term trade. Look, the market is down significantly, but it's still up 27% year to date. It's up 270% over the last 12 months. Crypto is the best performing asset class in the world out of the last 1, 3, 5, and 10 years. And as you extend your investment horizon, your risk in investing with crypto goes down. Short term, it's a very volatile asset, but long term, at least its historical track record has been good. And there's been nothing about the past few months that's interrupted that story.
Yeah, fair enough. Although there has only been one 10-year period ever for Bitcoin, but we'll see how it plays out. You mentioned this sort of period of uncertainty related perhaps to some worries about regulation that might be imposed. Why do you think that's going to be just a fleeting period? I mean, we have Fed Chair Jay Powell saying, look, if we had an official stable coin or something and a digital dollar, there would be no reason for crypto.
Well, I don't think he's right. A digital dollar, I think, would be great for crypto. You would still need digital gold. You would still need Ethereum to be the new internet of finance. I think it's a short-term pause because the secret about increased regulations in crypto, the thing that very few people know, is that that's the single most positive driver of a future bull market. We talk to financial advisors all the time. We did a survey of 1,000 of them in January of this year, and we asked them what's keeping them from investing. And the number one thing wasn't price volatility. It wasn't how to value Bitcoin. It was the lack of regulatory clarity. So as long as the regulations that come put crypto on par with the traditional financial system, I think that's going to be the catalyst for the next bull market. And what we've seen in crypto regulation over the past few years is very balanced approaches, punishing the bad actors and creating a sandbox for crypto's growth. That's what I expect out of Washington. And if that's what we get, I think we could be at the beginning of a major new bull market. So we have to go through this period of uncertainty, but if we get to the right place on the other side, I think it could be very positive for the market.
Bitcoin hitting its highest levels since May, ahead of El Salvador's official adoption of Bitcoin as legal currency. That starts today. The move makes it the first country in the world to officially put Bitcoin on its balance sheet and hold it in reserves. Here to break down this test case, essentially, with us is CNBC's Mackenzie Sigalos. Mackenzie, great to have you on. I know you've been doing a lot of reporting around this, but the fact that we did see Bitcoin jump ahead of this and now it's under a little bit of pressure today, I mean, this has in many ways been kind of the bull case longer term around Bitcoin, the fact that you could actually use it to transact for everyday items, right?
Right, and I think that that's one of the major things that people are looking for today on the ground in El Salvador. Citizens can now, from today, technically use Bitcoin to buy virtually anything. So we're talking a cup of coffee, a haircut. They can also pay their taxes in Bitcoin. And that's why you did see this price run up in the last few weeks. Like Bitcoin's price was touching highs that it hadn't seen since May. And then yesterday, the government announced that it was adding almost $21 million worth of Bitcoin to its balance sheet, and that's where you saw this huge bump up in the price. And yes, it has come off of those highs, but I think people are watching to see how rollout goes, and we're starting to see that. From midnight, I was on the phone with people who were on the ground in San Salvador, and they were actively downloading the wallet that the government has offered to all citizens.
I gotta go pee again, guys.
To see it all happen in real time.
And I lost my phone, so I need to go find my phone.
We're essentially only hours into
Who's
this
here?
rollout.
Mama Droid, what's up? How you doing, hun?
From a technical standpoint, how those downloads are going right now.
Hope you're doing
and also,
well.
given the fact that
Edson, John P1, thank you for the follow. There's so many people in the chat, but welcome, guys. Welcome to the stream. Sorry.
That stat has been called into question just because it's
I hate when I lose my phone. Sorry, and it's like right next to me. It's so funny.
To be a part of this Bitcoin economy, and in terms of how successful the rollout has been so far. So, I mean, was this a flip that switched at midnight? No, it wasn't. But, people were actively communicating with one another. The president was helping to troubleshoot IT issues. And so at around 2 a.m., that's when we first saw the wallet go live. And it's something called the Chivo wallet, which is Salvadoran slang for cool. And so the government is really pushing people to become a part of this economy. And the way that they're doing that is by
I'm
saying
good. I was
everyone
like,
who
where is
signs up
she?
for this wallet
Oh,
gets
I'm right here.
$30, and that's no small sum.
I gotta
In a
go pee
country
real
where,
quick.
you know,
I've
the
been
average minimum
drinking so
wage
much
is
water,
$365.
which is a good thing.
And so from
But I've been
2 a.m.,
having to
it
pee a
hasn't been
lot,
totally
so.
smooth rollout, but we have seen successful downloads. We
I'll be
have
right
seen
back,
people
guys.
receiving that $30 into their wallet.
Mackenzie, from people who are, you know, intently watching this from the kind of Bitcoin camp, let's say, the people who really believe in it, what would represent success, either in terms of volume of transactions or, you know, just the adoption or displacement of other types of payments? What are our benchmark indicators?
I mean, you said a few of them there. I mean, I think mainstream adoption. I think that one side of this, you know, going beyond using Bitcoin as a currency, as a form of, you know, exchanging value, people see it as a way to help Salvadorans save money. And, you know, it's a largely unbanked population. And so this gives them a way to build this culture around saving money. And I think that that's one thing that a lot of crypto insiders have, well, Bitcoin insiders, because this is really a Bitcoin project. And what Bitcoin insiders have spoken to me about is that they're excited about moving people from this government wallet, which is custodial, to their own wallet where they hold the private key and they have 100% ownership over their wealth. And that's, you know, that's something that a lot of these people haven't experienced before. And I think that that's what they're most excited about.
Mackenzie, El Salvador has been looked at as a test case for a while. Are people talking about which country might be next?
You know, Panama was watching, but I think that a lot of countries are keeping an eye on how things play out in El Salvador. And, you know, not everybody is happy about it. The IMF and the World Bank have expressed concerns about what this rollout means. So I think that there are a lot of people on either side. You know, there are a lot of big supporters, but, you know, you have a large portion of the population that also is confused about what this Bitcoin rollout means. They're inherently skeptical. So there are quite a few barriers to entry. So it'll be very telling how this plays out in the next few weeks, in the next few months, as we get a better sense of what this rollout really looks like.
I would say that there are really three narratives driving Bitcoin right now. There's the sort of Elon Musk almost meme stock narrative that's driving retail. There's the Bitcoin as an inflation hedge asset that's driving Wall Street and institutional players. And then there's Bitcoin as a tool of economic empowerment that's driving actually a lot of the industry itself. And all three of those narratives have had big wins over the last couple of years.
Doopy, thank you for the follow, Crypto Explorer Isk. Tamira, welcome. Thank you for the follow.
If you look at some of the more kind of market
Hello, guys.
factors,
Hello.
Things like Bitcoin relative strength, we're not quite
Yes, I
back
am
in that
live
market
too. Glad to
territory.
see you. Good. Yeah, been chilling. You know, I haven't been able to stream often, so.
So-called crypto whales, whether it is the push-pull, maybe perhaps codependent relationship with Elon Musk, whether it's Paul Tudor Jones and his comments yesterday, or whether it's
All right, I gotta work on our
Michael
tweet real
Saylor
quick,
over at
guys.
MicroStrategy as they continue to
Give me a
raise money to buy
second.
more Bitcoin.
Yeah, no, by the way, good to see you. Thanks for having me. Yeah, I agree with Jill. I think her narratives are spot on. You know, I think when you think about
Hello.
what's happening here,
Goyota, hello.
really think long term, and the thing that jumps out to us
Welcome,
is
guys. Welcome to the
all
stream.
these short-term price movements, I think, are going to pale in comparison to what will happen over the next decade, both with Bitcoin as an asset, as we see all these institutions coming in, and Bitcoin and Ethereum and DeFi and sort of these as a new software platform that unlock all sorts of economic innovation. So, you know, in the short term, I think you could see it go up, you could see it go down. The thing that gets us really excited is that in the
Tim,
medium and long term,
LS, welcome back.
it's gonna
Hello,
be a successful
guys.
of the internet, and we're just in the early innings of that.
Avichal, it's Scott. I just have a question for you, and I thought the way that Morgan described it was so perfect, this codependent relationship, she said, between Bitcoin and Elon Musk. And I'm just wondering, how can we take something as a serious asset class when it has that kind of a relationship with, whether it's Musk or Jack Dorsey or whomever, comes into the spotlight with a big name and either backs it or disses it, and it fluctuates in either direction based on that. How do we take that seriously?
Yeah, it's a great question. You know, I tend to think that the narratives around Elon Musk or any of these sort of the meme effects of it are a little bit overstated. You know, I think at the end of the day, what's going to drive this are going to be capital inflows and outflows. And the bulk of capital inflow and outflow is going to come from very deep-pocketed institutions that are not paying attention to what Elon Musk tweets week over week. And so over time, I think it makes for a nice story. I think it's fun. Elon knows how to use Twitter. He knows how to use social media for his own personal advantages, for the benefit of Tesla. But at the end of the day, I think it's a nice story, but I don't think it actually will matter in the long term. If you look at the amount of capital that really needs to go into Bitcoin for it to achieve what it's capable of, being a global asset class worth more than $10 trillion, Elon Musk can't herald that kind of capital. As an amazing a fundraiser as he is, he's not going to be able to bring $10 trillion into the space. And so at the end of the day, I think, if you're seriously considering Bitcoin as an asset class, if you go back to the kinds of things that Jill is talking about, is it an inflation hedge? Is it a way for emerging economies to have a different sort of payment system? Is it a new asset class and V1 of a technology that's going to revolutionize fintech and finance? And those kinds of things I think will ultimately dominate. And so I think the real deep-pocketed institutional investors are paying attention to those things much more than they are Elon Musk.
I think, Jill,
That's interesting.
Paul Tudor Jones used sort of the description yesterday.
People pay too much attention to Elon Musk.
He
It's
liked
like,
it because it was
come in
something
here, thank you for the
that
follow.
used the word certain. And I'm trying to think, it seems like it's anything but certain, right? I mean, how can something be considered a store of value or certain if it fluctuates so wildly and has so much volatility, either moment by moment, day by day, or week by week?
So does the fucking dollar. The USD fluctuates and is volatile. Okay? How do you think inflation happens? You think, over the time, people just fucking, it just creeps up and magically, and you're like, no. The value of the dollar goes down by day. Just, I'm so sick of people fudding on cryptocurrency, saying that, oh, it's so volatile. Oh, the price and the value goes up and down. Do you not realize that that's what happens with fiat right now with the USD? Do I have to show you guys? Like, goodness, look. Value of the dollar over time. Oh, I just find it so fucking funny. Oh my god. Look at this. The value of the dollar. Purchasing. Okay. Let me see. I don't even know what graph to go by, but look at all those reds! The dude advocates for paper money that we print infinitely, calls Bitcoin volatile. Exactly. It's just the news.
You have to remember that Bitcoin is more than just a price, right?
There you go, bitch! Get his ass! Get his ass! Sounds like a Japanese stoner.
And when I heard Paul
Too
Tudor
stoner?
Jones saying that on CNBC,
What's up, stoner scientist?
What I heard him talking about was the technology. He was not talking about the price.
Volatile?
And in order to be
Volatile meaning that, it's a risk. Yeah. Meaning there's a risk, with investing your money because it could, what does volatile mean for crypto? I can't spell. It is fine as dispersions the price of an asset has shown from its starting price. Investment considered volatile if the prices move aggressively up or down daily, as it can be seen in the cryptocurrency market. But look at this. Investing your money. Oh, look at the dollar. It is below the value of the dollar is below $1. Don't tell me. Don't tell me that this shit isn't volatile. The fuck are they on about? More risk, more volatile? Because they're saying that the price... But look at the price of Bitcoin. 1 Bitcoin doesn't mean $1. So... whatever. Like, the value is always going to change over time. But you're not going to be able to make money by with fiat system by letting it sit in your bank, unless you've got a specific, you know, that there is a risk in the sense of, you know, the amount or the value going down, but your tokens, your Bitcoin will remain the same number. That makes sense. So let's say you have 5 Bitcoin, like you're fucking rich and loaded. You have 5 Bitcoin. You'll still have 5 Bitcoin. The value of 5 Bitcoin will change, but you'll still have 5 Bitcoin. So there's no different than fucking USDT.
Investor in something at a favorable price and to ride the increase in that price over time.
Unless you buy something with Bitcoin, or you invest, you trade it or convert it, you'll still have 5 Bitcoin. That doesn't change. Now, the value of Bitcoin will, of course, change, just like the value of the dollar. It changes.
To emerging technology, you have to study the technology.
It's just so
you have
funny.
to be a believer in the fundamentals
And people,
of technology first.
Hey, Beaver,
so
what's up?
I would just remind you and remind anyone watching that Bitcoin is first a technology, and the price is, you know, is there as a factor of that.
Exactly.
Crypto rebounding in a big way in August. Ether headed for its best month since April. Bitcoin is well above the July lows of about $29,000. However, not able so far to sustain levels above 50,000.
Do they mean Ethereum?
Slow Ventures, venture partner, and open money.
I see real estate becoming buying NFTs on Mars, dude. Be dope. What's up, Tom? How you doing? I'm doing good. How are you?
A little more right now, I guess. And what do you think it reflects right now in terms of this massive shakeout we've had this year, just in the prices, in terms of the underlying level of activity?
Yeah, well, as you say, there's been a rebound across the board, and Ethereum does seem to be benefiting more than some of the others, certainly more than some of the others in the long tail of altcoins. You know, Ethereum has a big upgrade that's coming down the pipes that will change a lot of the dynamics around it, that will make it more green. That's obviously been a big narrative around cryptocurrencies this year. But it's also just seeing a lot of demand in terms of use. You know, we're seeing a resurgence of the NFT craze, which has been a lot of fun to follow and ride this year. And every time there's a transaction in one of these NFTs, that demands the payment of a fee in Ethereum. And so a lot of it is actually more fundamentally driven and less speculative than one might expect as an outside observer.
Well, you called it a craze and you said it's fun. So let's talk a little bit about what the NFT phenomenon is really.
He's already funning on it. A craze. That doesn't just because it's a craze doesn't necessarily associate with it being bad. And just because it's fun doesn't mean it's a fad.
It's all about non-fungible tokens being utilized a lot, at least getting attention a lot for just essentially people buying images, spending a lot of money in these.
Oh my god, he just called NFT images.
Lol.
Oh my, every time someone calls an NFT a fucking JPEG, I'm gonna drink a shot. Oh my god, they're not images. NFTs are not images. He literally just said NFTs are non-fungible tokens and then says they're buying these images. No, they're not buying images. Oh my god, sorry.
These auctions for these digital.
And also, NFTs don't only have to be auctions. There's not always betting when it comes to NFTs. There are other ways of buying an NFT. It could be right out purchase. You can bid on it. You can negotiate. There's so many different ways of getting an NFT. There's not just one. So it's just so fucking funny. Dim Vention. Hello guys. Welcome to the stream. Hope you're doing well. Cham Wayne, welcome.
Images, and obviously a lot of critics of crypto who kind of say, what purpose does this all serve?
Oh my god.
My view
because
is
they were
you don't consider
dumb.
it an asset. If you consider it something you just buy, people buy lots of non-useful stuff all the time. But how should we be thinking about this?
Yeah, that's right. I mean, it's not hard to draw parallels to whether it's baseball cards or Pokemon cards or Beanie Babies of the past. But, NFTs, a lot of people say, oh, this is going to be the future of art. I think the reality of what's going on right now, though, is that people are having fun with it. People view it as a form of entertainment. Again, as with those assets like baseball cards and Beanie Babies that I mentioned earlier, that doesn't necessarily mean that it's a speculative bubble, however. People talk about, oh, millennials spent money on experiences. Well, guess what? Gen Z is spending money on their portfolios, whether it's of meme stocks.
Hey,
or
Flavia, what's up?
NFTs. Those two things kind of go in the same bucket, hand in hand. And this is a way of having identity, of signaling, and I think that those are very real social phenomena that you can't discount. They make people feel a certain way. They make people feel a sense of belonging to a certain group. It's social signaling. And again, those are all very real. You look at major fashion brands of the world, they're based upon social signaling and identity. And there is very material market cap there, right? And no one talks about Birkin bags being a speculative bubble.
Jill, when you look at gold, and I mean actual physical gold, we've seen gold futures, the price of gold move higher over the past week or so, in part because of those terrorist attacks in Afghanistan and the strikes and everything that's played out. And I realize the U.S. is not there with a military presence anymore as of yesterday, but it does speak to geopolitical uncertainty in general right now, and also I would imagine in a place like Afghanistan, ever-increasing need for ways to move money around as well, given the situation, the potential humanitarian crisis that's emerging there on the ground. I wonder how that plays out for cryptocurrency, especially because we've had so much debate back and forth on whether it is digital gold.
Yeah, and never in my life did I think I would be talking about NFTs and humanitarian crises in the same breath, but it does speak to the range and the breadth of utility and use cases that cryptocurrency is just starting to demonstrate. And so, it's a big transition to make, but it is true that cryptocurrency also is seen as and is demonstrating in some small pockets of the world its utility as this global currency, as a censorship-resistant currency. I know CNBC put out a great report earlier this week on some of the utility, the pockets of utility that Bitcoin specifically is seeing in a place like Afghanistan, where people are, figuring out how to navigate this crisis, where they don't have access to the banking system, where they're trying to figure out how to bring their goods with them and their assets with them. That's a lot of what I've done work on in the context of the Open Money Initiative. And again,
Shamwayne, thank you so much for the follow. Welcome.
Not everyone who is doing this. There are vast swaths of people who, even if they know about cryptocurrency, don't have access to the appropriate infrastructure. But the fact that it is seeing some utility in this way, I think is very meaningful and very powerful for what it could entail in the future.
Yeah, real world.
Bitcoin up 55% from July lows.
Thanks very much.
That's awesome.
Thanks so much.
Yeah, when everyone was like shitting on it and being like, oh, it will never get back up. It was like in the 20,000s, and now it's like in the 40,000s again.
Out of that discussion is the fact that SpaceX, Elon Musk's other company, also holds Bitcoin on the books. Here to discuss is Chris Zulke, DRW partner and head of their crypto division, Cumberland. Chris, thanks for being with us today. I mean, we have what seems like generalists and specialists where cryptocurrency is concerned on our air. What specifically does Cumberland do? Where are you focused within this market?
Thank you, Morgan. Well, Cumberland is a specialist in providing liquidity for the marketplace. What we look to do is to make sure that our counterparties have access to a depth of liquidity and the ability to execute that they might not be able to find elsewhere. So oftentimes we're trading somewhere in the order of $100 million at a time to ensure that those counterparties can trade when necessary.
All right, so
Now,
I want to get your take. Oh, go ahead.
On the other side of it, we're seeing a generalist model where other organizations focus on providing a full vertical of services for the industry, custody and agency execution and potentially a central limit order book. And those two things need to live side by side in order to have a healthy marketplace.
Yeah, definitely. So first off, thanks for having me on. Good to be here. At our
Let's see. What else we wanna do? Is there anything on YouTube you can watch about crypto? I don't know where's the best live crypto, like... Don't look at it. Okay. You guys can see that. Crypto news. Like, what is the best crypto news, like, area? Crypto's next big thing, decentralized finance. Yes, let's go. Fucking on it. That's the dream, dude.
Crypto is on the verge of revolutionizing
DeFi is the future.
I would say it has the potential to make the current financial system more efficient, accessible, and faster. We're talking about decentralized finance, or DeFi, a financial system without banks, at least in the traditional sense, without a middleman executing your transactions. Instead, you have smart contracts, or computer code that automates the process.
Anything you would go to a traditional financial institution for, like high-yield savings, borrowing, lending, trading, investing, those are all things that can be found in DeFi.
Decentralized finance has captured only 5% of the crypto space, but it has attracted massive growth. There is $93 billion worth of DeFi assets in the crypto market as of June 2021, up from $4 billion just 3 years ago.
The really massive creative power of DeFi is how developers can iterate and build financial applications. That was really never possible in finance.
The pace of DeFi has slowed since.
Hey Rebecca, what's up? Alan, hello guys. Miguel Casado, welcome.
Crypto's checkered past. Here's how decentralized finance works, and why lawmakers and the financial establishment are keeping an eye on it. Decentralized finance, or DeFi, can be described as an ecosystem of financial applications and projects built on top of blockchain technology.
The whole point is that they're decentralized, which means that whoever you're transacting with, you're doing it directly with them rather than through a traditional financial institution like a bank or an exchange or a brokerage. So rather than having one of those traditional entities mediate the transaction, it's mediated by smart contracts, which are self-executing contracts according to the code, which include the details of the agreement with you and the other person.
Most DeFi projects are built on Ethereum because it was one of the first programmable blockchains that can handle smart contracts. Most DeFi protocols are governed by their own
Cardano
communities,
is
or
taking
what's known
over.
as a decentralized autonomous organization, DAO for short. Only the members who've invested in an individual project's token.
Hello, Podman. What's up, guys?
Future. It removes the control from one person. The crypto industry was born in reaction to the 2008 financial crisis. DeFi's goals stem from that and give users control and visibility of their own money without a third party.
A mainstream user can either decide to go directly and use these protocols, or might be indirectly using some of the traditional financial intermediaries at the same time. But the main difference here is that the user will have a choice that you either can rely on someone, or you can manage your own cryptographic assets and your keys by yourself, and it brings kind of like the finance as a human right for the users.
If we start to see DeFi actually impacting things like making it easier for small businesses to access credit at a larger scale, easier for people to access mortgages or other kinds of examples of providing some sort of real benefit, then it'll actually start to be easier to understand sort of how it works and the point of it.
During the summer of 2020, interest in decentralized finance began picking up. The total value locked in the space grew from $7.8 billion on June 20th, 2020 to $19.4 billion
Jesus
on September 21st,
Christ.
2020. The total value locked is a metric used to assess how much crypto is committed to a smart contract of a project.
Since 2018 to 2020, we saw the rise of automated market makers, which for the first time bootstrapped liquidity and allowed these decentralized exchanges to become much more liquid than they were. And at the same time, we also saw an increased development activity on the user front end and made these applications much easier to use.
Most DeFi projects or protocols can be categorized into four main buckets: decentralized exchanges, lending platforms, asset management, and derivatives. Decentralized exchanges and lending platforms were the areas that grew the most during DeFi summer, so we're going to highlight those. Decentralized exchanges, or DEXs, are cryptocurrency exchanges that allow users to trade without giving control of their funds to an intermediary. One of the leading DEXs is Uniswap, an automated market maker protocol built on Ethereum that has risen due to its liquidity offerings.
So a lot of crypto assets try to do everything. Uniswap does one thing. It tries to compete with Coinbase. And it's interesting because there is massive trading volume on Uniswap. It's trading $40 or $50 billion of crypto per month. It's generating hundreds of millions of dollars of fees.
The developer of Uniswap, Uniswap Labs, is currently under investigation by the Securities and Exchange Commission. Decentralized finance allows anyone to borrow and lend cryptocurrency. Users can earn interest when they loan their assets. They can also borrow other cryptocurrencies by using their current funds as collateral. Stani Kolechov is the founder of Aave, one of the first and leading DeFi lending protocols.
Cryptographic assets these days can be Ethereum, so-called stablecoins. Aave protocol allows actually to supply these kind of assets into the protocol, and then there are other participants that are taking those funds out of the protocol against a collateral, which means that it generates yield for the suppliers. It's a place where you can grow your cryptographic assets in form of interest yield.
DeFi continues to expand and you go from 100 billion to 500 billion, 600 billion, the banks are going to have to start realizing, hey, there's actual real competition here as assets are flowing into the DeFi ecosystem and away from us.
Decentralized finance has attracted Wall Street veterans and developers alike. It has pushed crypto's potential from being simply a digital currency to a software tool that can be used to improve the antiquated traditional financial system, thanks to the programmable qualities of Ethereum.
The thing about crypto that gets traditional financial people so excited is that as a technology, it solves all that. It allows money to move onto the internet. It allows you to program money. It creates digital property rights. It introduces efficiency and creates the potential to disrupt an industry that is one of the least efficient in the world.
Investors have been on the hunt for yield.
Like Nexo, right? I don't know what that is. Hello, Prince. What's up?
Chase yield through a method known as staking.
A lot of these assets you can stake.
That's a hard wallet.
And that reward gives that token some value or some aspect to it that you can then kind of derive what that asset should kind of be worth. There is almost like an income that can be generated from staking these rewards, from mining it, or some other process.
You know, on the institutional side, a lot of the ones that you're seeing start to jump in are the hedge funds. They are able to be a lot riskier, so they're able to experiment more.
One of the key drivers is that there is a lot of need for leverage. So many of these protocols, what is happening is that you are able to unlock capital, and to unlock capital,
Dim the chin to give the follow.
Cryptographic assets into the Aave protocol, you're borrowing cash, which means that you need cryptographic stable coins, and that means that the yield on that cash and the cost is going higher. And what usually is the typical use case is that you take the cash and you buy more of that particular asset, and you are leveraged position. Decentralized finance is like the electric car in the automobile industry. So, you know, everyone kind of knows that that's the future, but car companies will still make cars. They will just make electric cars instead.
Regulatory concerns, though, continue to hang over the entire cryptocurrency industry and could stunt DeFi's growth.
You know, there's not a lot of KYC implementation that could even be collected because a lot of this is just a decentralized open source system. There's not really an account that's collecting information. So some of the information sharing agreements and stuff like that you see in traditional markets, it's hard to replicate 100% in DeFi. So what needs to happen is probably a more nuanced model and
New Incent code, guys.
Now, I think we are starting to see some of that. There could be some cases where this infringes on DeFi and it could hurt some DeFi assets, but it could also be a case where you establish a more mature DeFi ecosystem where you actually see more growth.
DeFi comes with a huge risk because of the lack of regulation. Investors and users have no protection or insurance if they lose their cryptocurrency in a protocol or through loaning assets to another user. The risk is well known, but with the huge risk comes huge gains. For traders, the crypto markets remain volatile. In March 2020, a sudden 30% price drop in Ether triggered chaos in the DeFi space. Some investors lost all their collaterals in protocols like MakerDAO. MakerDAO, once considered the DeFi poster child, has been blamed for not fully representing the risk to investors. Rune Christensen, the co-founder of MakerDAO, says the protocol had been prepared for this event and was able to recover from the event, but it was a case that the system hadn't seen before.
It was a disaster, but the Maker protocol and the whole space was able to recover from it pretty much instantly. Afterwards, the Maker protocol and the community, they then just like were able to analyze the situation and then make a whole bunch of adjustments and upgrades to deal with future situations like that.
DeFi Summer didn't fix these issues and arguably has led to the rise of gambling protocols in some parts of the space. Still, optimists in the space say MakerDAO's rebound proves DeFi's strength and room to improve.
You can really see the sort of evolutionary potential of decentralized organizations, because anytime there is a loss of defeat, I guess you can say.
Hello, Phantasm Magoric. What's up, Charles? Hello, RD.
Create resilience.
It will be some time before DeFi can be used in the real world and becomes a household name. But as the crypto space grows, investors are going to continue holding on.
A lot of people in crypto and a lot of institutional investors that are looking at this space really are thinking over a long term. And I think that if you have the patience to wait that out, you're going to see which companies are able to be tested and emerge out of it and continue to be successful.
Hell yeah. Chubby Furry, hello. Welcome, guys. Shootin', what's up? Let's see what else we've got. Coinbase sell-off overdone. Shark Tank's Kevin O'Leary discusses crypto investing. Okay, let's listen to this. Is Yahoo
Investors are also keeping a close eye on crypto. We want to take a look at Bitcoin because Bitcoin under a bit of pressure today, still holding above 47,000 right now. But we want to get it over to Danny Ramiro, who's joined by two special guests. Danny?
Thanks, Shauna. In the world of cryptocurrency, FTX US, the US arm of the world's biggest crypto exchanges, has partnered with Shark Tank investor Kevin O'Leary as an official ambassador.
Crypto volatility. Can they stop saying that?
Is Kevin O'Leary himself and Brett Harrison, president of FTX US.
So fucking
Thanks
dumb.
so much, guys, for joining us.
Thank you.
Cryptocurrency is still volatile.
And Kevin, let's start with your deal with FTX. What was your thought process there, and why FTX US, and does it solve your compliance problems?
Yes, it does. I don't endorse products or services that I don't actually use. I eat my own cooking. I think that's important. I have been trying to solve this compliance issue with my own internal compliance department, my external auditors, and of course the regulators for quite some time now. The truth about crypto and the opportunity as well is that it really hasn't yet been adopted by large institutions the way people think. And the number one reason for that is not lack of interest. They want to allocate Bitcoin, Ethereum, et cetera, and many other tokens, coins, change, whatever, but they don't have the infrastructure to report into their systems. It's that simple. When you buy a stock or a bond, let's say you're running $1 billion mandate, and you want to allocate 10% into a portfolio of crypto, that's $100 million. You don't download an app on your phone and do that. You have to have it built into the infrastructure that marks to market by the second, like a stock or bond does. Your compliance department can see your position every second. At the end of the day, reports it to your external auditors. They sign off on your statements, and it goes off to the regulator. There is no
Hello, Lamas,
infrastructure
Noob
yet.
Emperor. What's
So
up, guys?
FTX is the largest and has the most invested in building out what I call institutional grade compliance. So I've been able to do that. I've been able to structure a situation where I can manage now my own portfolio on an FTX, and I'm starting to build up from a 3% weighting up to 7% in my operating company by the end of the year, and I'm going to be using FTX to do it. So I feel very comfortable endorsing this product for what it does, provides as a service, and how it can help someone like me and thousands of other institutional players solve for this compliance problem. It boils down to, I get the best service, I get access, all that, but it's compliant. And that is what I have to care about first.
And was the deal paid in dollars or in crypto? And I guess what does, I know you mentioned a little bit about your portfolio, so what does that really look like now?
Well, actually, I didn't want to be paid in dollars. I want the smartest guys on the trading desk at FTX to tell me what I should own. It's that simple, because they get to look at a lot of different products from all around the world. I want crypto. I want to have an allocation of around 7%. And I don't want it to be just in Bitcoin. That's not diversified enough. So I'm building a portfolio with them now, deciding what I want to hold. And I've decided going forward, I'm going to disclose and be transparent on the percentage ownerships of what I own. And I think that's very important because one of the things I get concerned about is I have millions of followers. I don't want people to think that I'm buying things and then promoting them. I'm going to disclose what I own and why I own it, why I think the merits of each of these positions are on a monthly basis. I'm really, really interested in DeFi. I think it's disruptive. It's going to be much less friction in the costs of all kinds of services. Just my FX costs of the largest market in the world is currency. When I want to buy a Swiss stock or a European stock in euro or British stock in British pounds, I've got a trader in front of me clipping me for bips every time, both ways. I detest them. Okay, sorry, those words are too strong. I don't like those guys, and I want to get rid of them. And I'm hopeful over time. They add no value. They add no value, and that's just one use case of what the future holds for decentralized finance. And I think FTX is at the fore of all that. And why wouldn't I want to be associated with a player like that? It makes total sense for me. And for me, it's to be that dialogue with the institutions that I talk to every day about how I'm tiptoeing into crypto.
Yeah, and Brett, onto that point, I know that you're planning on entering, crypto derivatives and, expanding your user base. Where is the company on that?
Absolutely. So as you may know, recently FTX US, which is currently a regulated spot cryptocurrency exchange, we trade around $200 million a day of spot crypto volume on the exchange. We recently acquired LedgerX, which is a CFTC regulated derivatives exchange and clearinghouse, which is going to give us the ability, in collaboration with LedgerX and also in collaboration with the CFTC, who regulates derivatives in the US, the ability to offer crypto futures, crypto options, and other kinds of futures and options to our customer base. And we're really excited about this because, of course, crypto is immensely popular, but not many people know that more than half of all crypto-related volume globally trades in derivative products like futures. And what we want to do is bring that volume onshore onto the US within the regulatory envelope of the CFTC in a way that's available easily and safely, reliably, and in a compliant fashion to institutions and to retail customers.
And to that point, are you concerned of any of these regulatory crackdowns, especially that have occurred with DeFi?
At FTX US, we have found through our many different conversations with regulators, the SEC, the CFTC, that their door is open and they want us to walk in through the front door and talk with them about what we're doing, how we can work with them to be compliant with the regulations that they want to create and have already created in many circumstances, to bring these products, again, in a safe, reliable way to consumers in the US. And through those conversations, we found actually they are quite open-minded. I think that there's this misconception that the regulatory agencies in Washington just want to clamp down on all innovation in crypto. And it's just not true. What they want people to do is to work with them openly and collaboratively to make this happen. So at FTX, we're not concerned. We're very excited about these ongoing discussions that we're having with the SEC and with the CFTC.
And Kevin, what is your thought process in terms of the infrastructure bill, the taxation, the regulatory debate that's going on? What do you see happening?
I'm actually very pleased that the regulator is getting far more involved. We've obviously had a bad press in the last couple of weeks regarding their role with some of the players in the industry. But the truth is, innovation is being created through decentralized finance. They know that. The U.S. should lead that. They should pioneer it. They should lead it. They should invest in it. That's not lost on the regulator. The best analogy I've used for this is I love to watch Sunday football. I watch every game. I go into my man cave and I watch it. Those players can't play unless they know the rules. They have to know the rules. There's so many people that want to play but don't know the rules yet, and it's the job of the regulator to provide those rules and the rule book, and they're going to do that. And so I'm very, very pleased at the innovation that's been coming. I know we're going to get it right. The amount of buying, you got to look at it from the upside. If all of a sudden the rule book was published and the regulator made the rules up from NFT through to derivatives to futures to coins to chains, and all that stuff was settled, then all of a sudden you would have trillions of dollars of buying coming into this market, and that would be great for every participant and great for competition and great for services. And maybe I can get rid of those FX traders while we're at it. So, the way I look at it is this is all good. And just because there's friction and a little volatility and some positioning, it's not true that the industry wants to go to war with the regulator. It's far from that. It's like Brett said, everybody wants to talk to them and find out what the rule book is so we can play ball.
Totally agree. This is such a positive sign that this debate.
Hey, Grimzel. Hello,
right now.
IR. Welcome, guys.
That the senators on the floor, they want to be educated about this. They want to craft legislation that helps encourage innovation in the space and responsibility. We believe that crypto exchanges like FTX US should be able to report taxes to the government, and that's to the IRS, and that's totally reasonable and normal. We want to make sure that we craft this legislation such that it encourages innovation for players in the crypto space and in the DeFi world.
Well, such a great conversation. Thank you so much, Kevin and Brett, for joining us.
Well, as we prepare for the opening bell on this Friday morning, let's take a look at some movers that we are watching. There is a potential deal in the asset management business, Brian Sozzi, and I emphasize the potential part of it because this comes to us from a Wall Street Journal report, and the Journal report cautions that the deal may not happen. Now, there's usually this caveat in these kinds of stories. This one, though, feels a little bit stronger. I don't know if it does to you, but here's the deal that we're talking about potentially. Invesco could be merging with State Street's asset management business.
The SEC door is not open, as evidenced by the Wells notice the SEC sent to Coinbase. Coinbase asked for a meeting, but the SEC chose to use enforcement action. I don't care about Invesco right now. Who will replace Ethereum? Oh, here it is.
In the meantime, let's pivot. Look at shares of crypto exchange Coinbase, up today about 2/3%, but still down sharply.
Sell off, overdone. Oh man, I don't like Coinbase that much. But we don't have that many options in the U.S.
She was surprised the SEC hit Coinbase with the Wells notice. Listen.
I was shocked when I saw Wells notice. Are you kidding? They haven't even released the product. What is this? And I think what that Wells notice is doing, it's a call out by regulators saying, we got to discuss this stuff because this is happening very quickly. And I think we are going to bring courts into the system.
Piper Sandler senior analyst Richard Repetto has a new note saying the sell-off in Coinbase might be overdone. He joins me now. Rich, it's good to have you here. Let's talk about these, the SEC Wells notice, any action that may be coming from the regulatory group. Why aren't you more concerned about that?
Well, I tell you, the one thing the industry, I think, does need is more regulatory clarity and transparency. This issue was sort of a colorful issue, and it's really hard to explain. I don't think Kathy Wood could explain it, but I think ultimately, the regulators are battling for, responsibility, and they're moving fast. And I think the end result is going to be, overall, is going to be more clarity and transparency when we get through some of these skirmishes like we had this past week or so.
Which is not dissimilar from, the big tech platforms basically begging for regulation so that they don't end up getting crossed in the regulatory issues as well. But with Coinbase, because this Wells notice has already been served, what's the worst case scenario for investors at this point?
I think the worst case, people are viewing that this product that they had is no longer, at least temporarily not available. Other platforms are doing the exact same lend product as what Coinbase proposed. Coinbase is known for being very cooperative and collaborative with regulators. In fact, they communicated over 6 months on the product. So it's really I scratch my head. It's really surprising how they came to this stalemate. But again, I think it's, when you look at the long term, this is just one issue that I think ultimately is bringing a lot of light and a lot of attention right now, but it'll bring regulatory clarity and transparency, over time.
What happens to the lend product? Because while it's in this sort of gray zone, as Coinbase itself was pointing out, everybody else is doing, yield products that offer far more than 4%, and Coinbase obviously stands to lose if users go.
Hi, new to this platform, big believer in Theta and invested heavily. That's awesome, Investor G. Welcome to Theta. If there's any questions, let me know.
Relationship with regulators, how they interacted with them prior.
I've been with Theta for like about 3 years or so, probably longer than that, 4 years almost.
As publicly as they did, but I don't see them at all pushing the SEC further. But what I do see is more of attention being brought onto the space. And this space, I think, Kelly, the bigger, question is it's still in its infancy. And the bigger question is you need regulation, you need transparency. Even Chair Gensler today, when he, in his prepared testimony in front of the House, Senate Banking Committee, he talked about, the need for more for regulation and protection of investors. This space, we've seen, big technology changes in the past, and this is at least in my belief is a big one, present, and it needs, we're going to have to work our way through these regulatory, ups and downs and bumps in the road.
Sure, and I guess that would be what you see it as. It's basically a bump in the road. There's also more competition than ever. There's Venmo trying to get into the space. PayPal, obviously, is a parent company. There's Robinhood itself and how much crypto activity is going on that platform. You have a $335 price target. We're around $244 today. How do we get to $335?
Well, we based it on 12 times our estimate for 2022 revenues. Other fintech platforms, trade at that now. And again, there's going to be competition.
Welcome, guys.
We've seen it in other industries. The bigger thing, what we've learned from watching companies that were successful and, in big early, technology changes, they stayed focused on
convert BNB Smart Chain to BNB Binance Coin and
brokers, with the internet book. They stayed focused despite zero trade offerings from bigger banks. It did take 20 years, and we did finally go to zero commissions. But I think we're along. There'll be more competition on crypto pricing, but it's a much bigger space, and we see products evolving that that we're not even aware. Just like back in the internet days, who would have guessed that Amazon or Google were going to be the companies that they were? We're seeing new applications in the crypto and blockchain fields, like NFTs. Who would have guessed that NFTs would be as big as they are,
right,
2 years ago?
All right, guys, I'll be right back. I gotta go to the bathroom.
Our next guest says the Bulls will win this September standoff. JP Morgan.
I don't care for stocks. Gross.
Well, new cryptocurrency could help budget shortfalls in the city of Miami. On Monday, the city's commissioners approved a plan to accept crypto donations made through crypto mining platform City Coins. The currency, known as Miami Coin, has generated more than $5 million for the city in just a matter of 40 days. Let's bring in the mayor of Miami. We've got Francis Suarez joining us today. Mayor, great to talk to you again. I guess just as some background here, it's important to note that every time somebody mines a Miami coin, the city gets a 30% donation. You've said you've seen that number tick up pretty quickly. Why go this route?
Well, we want to be the most innovative city on the planet. And we also realize that for us to get there, we have to differentiate ourselves. We're not the Goliath in this equation. We're the David, and we're quickly growing in terms of the amount of venture capital and the amount of assets under management financing firms that are coming down and moving down in Miami. But we identified crypto as an area where we could really show how innovative we can be as a city. And so, we're the first city to begin the process of paying our employees a percentage in Bitcoin, allowing our residents to be paid in Bitcoin. And now with Miami Coin, what we're doing is potentially creating a currency that a percentage of the mining is automatically going to the city. As you said, it's going to redefine how cities are funded. It's not an involuntary tax. We're not relying on philanthropy. This is part of a protocol that anytime a Miami coin is mined, a percentage goes directly to the city. And the amount that it has generated is incredible. It's generated, I think it's $2,000 every 10 minutes at this particular pace. $5 million in 30 or 40 days. That could generate $60 million over the course of a year. And if this continues to be successful and grow, it could pay a significant portion of our budget, which is something that has never really happened in the history of cities.
And Mayor, I wonder if you can elaborate on that a bit more. There's obviously the innovation element to this. We know you've been out front very publicly trying to really get the city to be at the forefront of cryptocurrency. But I wonder how much of this was actually born out of need because of some of the budget shortfalls that Miami's faced. Does it provide a cushion? And if that's the case, do you see other cities following at a time when they're also struggling with their budgets on the back of what's played out during the pandemic?
Well, I can guarantee you that other cities are going to want to copy this model. In fact, I know I've gotten calls from mayors, even from cities in Silicon Valley, that have said, we can't believe this. The mayor of Miami is creating his own currency. But I think what's great about it is that it's providing real world benefits to our residents. The money that's generated, we hope to be able to put into educational opportunities for our children to be able to get the jobs that we're generating. We've generated 8,000 jobs with an average salary of $120,000 in the last 9 months alone. We can pay our police officers, our firefighters. We can do anything within our general fund budget that we need resources for. And like I said, as the market cap of Miami Coin continues to grow, the amount of resources that it's going to generate will as well. And it has never happened this way before. And so I think this is going to create a national model that people will look at as a different way of funding our government.
Yeah, Mayor Suarez, it is interesting to watch all of this play out, and the funds here, it sounds like it's going to be, sold into dollars when the city plans to tap it and use it. So, there is that in terms of restrictions still being restricted to dollars. When you look at kind of the attraction, though, beyond the money bringing it in, as Akiko's kind of talking, attracting companies to Miami. I know blockchain.com, when we were down there for Bitcoin Miami over the summer, they announced they were shifting half their headquarters to Miami. I mean, what have you seen in terms of new companies relocating down there, specifically in the blockchain space?
Wow, we've been so many. Like you said, blockchain.com, you have eToro, you have XBTO that just recently moved to Miami and and actually took the naming rights for Inter Miami soccer team. Of course, famously FTX, which did a $200 million deal to rename the arena. So we've seen such a movement, like you said, the Bitcoin conference, which came from LA and is now in Miami. It's one of the major, Bitcoin conferences. But we haven't just seen crypto companies; we've also seen finance companies. And just this week alone, CI Financial, enormous investment management firm out of Canada, moved to Miami, $300 billion of assets under management. So this narrative of the new Miami and a city of innovation is one that is becoming a reality more and more as you see the pipeline of deal flow growing by a large factor, and you see big finance companies moving as well.
Yeah, I mean, it is interesting because you guys are obviously very progressive and on the cutting edge here in the States, but the state of Florida, at the state level, we've heard maybe some pushback from Governor DeSantis when it comes to kind of vaccine mandates. And I'd be curious if that's kind of weighed on maybe some of that, and particularly you as mayor, the threat from him to fine local governments $5,000 for each time there is a violation of that vaccine mandate at the local level. I mean, how much pressure does that put on you as a mayor in Miami?
Things that we've done very successful in Miami is actually get people vaccinated. I was looking at a statistic this morning. It was almost hard to believe that 98% of our eligible population has received at least one shot. And so, we are heavily vaccinated in Miami. It's part of the reason why now, thankfully, our numbers are coming down significantly. But, we do see, and I have said this many times before, this is a pandemic of the unvaccinated, right? I fought very, very hard with the, alongside private companies like Norwegian Cruise Lines and the cruise industry and Disney to fight the state's efforts to impose on those private companies an inability to make sure that their passengers and their employees are vaccinated. And so, I think that those kinds of things where the government is telling the private sector what to do are not things that are helpful to private enterprise. And I think that private companies should have the right to be able to protect their employees and their customers.
Mayor, let's talk about something else you've been very outspoken about, and that is climate action. You've been a big vocal proponent of it, not just working with mayors in the U.S., but leaders around the world. And yet there's growing concern about the carbon footprints of cryptocurrencies, and particularly the use of energy that's required to mine crypto. What do you say to those who say that your embrace of crypto and this push for it runs counter to some of the other actions you are pushing for in trying to rein in the carbon footprint?
Well, I would tell them to do their homework because first of all, a lot of the ESG concerns of miners has to do with the fact that the large percentage of mining was happening in coal-producing countries like China and Russia. What we saw with China shutting down mining is actually a lot of that mining coming over to the United States, which is being done predominantly by ESG compliant companies. In fact, Core Scientific, which is the largest Bitcoin miner in the United States, is carbon neutral. It's a carbon neutral Bitcoin miner. They get hydroelectric power and they pay for offsets. So they are completely carbon neutral. So, the mining companies in the United States are very conscientious of ESG concerns and are making sure that to the extent that they are mining, they're doing it in a responsible way vis-a-vis the environment. And that's why I'm so excited to see America getting more involved in mining, because we're doing it the right way as opposed to other countries that are doing it the wrong way.
And of course, there are those who say that mining will actually be supportive of the expansion of renewable energy. So both sides to that debate for sure. Mayor Suarez, it's always good to have you on. Really appreciate the time today.
But the people who don't like crypto never get to see that kind of news. They don't care about those.
You appreciate the time?
Of course, thanks for having me.
I wonder, can you explain what it's like when you're obviously growing very quickly? The marketing effort is extraordinarily strong at a time where regulators, at least in the eyes of some, are getting more aggressive.
Yeah, absolutely. And I think a big thing here is that, we don't want to see regulation as a thing that stifles our business or the industry. We think regulation is incredibly important, and that's important to be working with regulators constructively. But that there are ways to do that while still being able to grow out your business. And, frankly, we think that that's the most important position to be in.
What do you make of it when some of your colleagues across the sector, and I'm thinking of Armstrong at Coinbase in this example, call the behavior of the SEC sketchy? Is that a view that is widely shared in the industry?
There's a wide variety of views. There are a number of people in the industry who feel that way. I think there's probably a number of people at the SEC who feel that way about the industry. I think there's certainly been some mutual tension there. And I think this is just a case where it got off on the wrong foot, I think, between a lot of players in the industry and between, the agency and between, Chair Gensler. And I think that, this doesn't need to be a war between industry and regulators. I'll be really sad if it ends up as one, because I think in the end, most people want the same thing, which is to be able to have access provided in a safe, regulated way to Americans for a new, growing, really exciting sector. And I think that unfortunately you see situations where the SEC feels like, there have been extremely non-compliant companies that have also been difficult to work with, and where the industry feels like they haven't gotten the guidance they want from the SEC. And, when there's sort of that divergence to begin with, and everyone's coming from a different perspective, sometimes that bickering just grows.
Yeah, I'd love you to respond. Actually, listen to Chair Gensler, who, as you know, joined us in the first half hour of our 9 o'clock hour, speaking specifically on this point that you're making, but also saying some strong things in terms of what he sees in the market. Take a listen, and then I'd love to have you respond.
Forward to further engagement with the companies in this space and the market participants. And it's really about how we bring basic investor protection.
Hey, better luck. What's up, guys?
Fraud and manipulation. And this is an area that's been rife with fraud and abuse.
It's the rife with fraud and abuse part, Sam, excuse me, is what stood out. What do you think?
Well, I think rewind 3 years, and I think I just agree with this statement. 3 years ago, it was an incredibly exciting growing space, and it was also extremely messy. And frankly, there were frauds. There were a fair number of them in the crypto industry. And there's also just a lot of market activity that would not have been allowed on a regulated platform. Now, I do think that things have been cleaned up by the industry to some extent over the last few years. I'd like to think we played a role in that. I'd like to think that others, including Coinbase, have played a role in that in terms of setting a different standard for the industry. But I still think that there are completely reasonable steps to be taken here by regulators to try to have some boundaries on, I think like one example is market manipulation. And I think one thing that I would expect the SEC to be looking at now, and I wouldn't be shocked to see some movement on, is around coming up with some sort of guidelines for crypto exchanges. Right now, they live in the money
New Incent code, guys. Hey, better luck. How you guys doing today?
An appropriate regime for part of the activity. But, I would expect to see, anti-market manipulation, anti-wash trading regulations and policies start to come out. And, obviously we've seen the SEC taking
You can't regulate crypto. Apparently you can.
And I think all...
Better luck. Unfortunately, there are regulations with crypto. People have been regulating... It's confusing. There are some blockchains that are being regulated.
We've built out internal fraud detection tools. We're welcome to share those, and
we're centralized, I should say. They're being more centralized.
On the flip side, I think it's important.
There are centralized exchanges,
especially in the context of those happening. And I'm sort of presuming those will happen, and that industry will be cooperative there.
I mean, Bitcoin was created to solve the issues with regulations and cut out the middleman and say fuck you to regulations and make it decentralized. That was the whole purpose of crypto,
It is. That, along with that, there is over time sort of further guidance on, I think, some issues on which, there are really legitimate points raised in both sides. And I think, especially when you look at what tokens might be securities, it's a really hot topic in crypto. It has been for years. There have been some players that have completely disregarded that, and I think acted in a non-compliant way. And I think the SEC sees that. But I also think that there's clarity that could be given on the margins there.
Whenever you hear, regulation and government intervention, you think, whoa, is that going to be a positive or negative? Well, and when you see things like Steve Cohen, the billionaire, now investing in new cryptocurrency in a trading firm, and you just see more and more staid Wall Street firms that are opening divisions, and even countries. Okay, it's El Salvador, but it's still a country that's using it as legal tender. All these things seem to indicate we're here to stay. Now we just have to figure out what the regulatory framework looks like to protect investors. Is this all positive, Vita?
Super positive, but I am actually very surprised with, not surprised that what he said yesterday, Gary Gensler, but what I was really actually surprised is we are quoting about this is wrong, those are some of the securities are supposed to be securities.
I do have hiccups, sorry.
But why are we not really going and saying this is the regulation, this is how it should be treated? Nobody in the space is saying, hey, we don't want to follow, or we're gonna be having an issue with following.
Don't make fun of me.
My biggest question out here is, instead of saying DeFi is producing this much earn or this much market cap or Bitcoin disappeared, why don't we just say this is the way to do the business and these are the regulations?
What would you, if you could advise the SEC chairman, and what how would you like to see this done? What is the to satisfy all the constituents here?
I think sorry, go ahead.
Yeah. We need clear and predictable guidance. Chair Gensler has stated multiple
Oh my
times
god,
that
bro,
he
like
believes the law is clear.
it wasn't a
Not
burp.
true. We represent over 200 businesses that are innovating with digital assets at the Chamber of Digital Commerce, and I have yet to have one company say, yeah, we understand what the rules to the road are. In addition to that, we represent about 40 different law firms that are practicing in this space, former SEC officials in these firms advising companies who also say the rules to the road are not clear. And at the end of the day, there is a brain drain. This is the most innovative and fastest growing industry in the world today, and we are driving that overseas.
Hello, it's...
And that really needs
Thank you
to
for the
be
gifted
taken into
sub,
account in the
Poplicker. Appreciate
policy
you.
process. What is the opportunity of losing business due to not having clear and predictable regulations? And it's
Let's give
not
you
just
some
me that's
NFTs.
saying this. Commissioner Peirce, who's also an SEC commissioner, has stated this over and over again. She's put forward a safe harbor for digital tokens. The SEC has not taken it up for rulemaking. We urge them to do that. And
Thank you
then
so
there's
much.
about 30 different members of Congress over the past 4 years. This isn't a new issue. Have either
Did you just
sponsored
gift
or
yourself? I didn't even
co-sponsored
know you could do that.
legislation to fix this issue. There's about a half a dozen pieces of legislation that looks to clarify when a token is a security. There's HR 1602, the Eliminate Barriers to Innovation Act, Congressman Tom Emmer's Securities Clarity Act, the Token Taxonomy Act. Again, we need clear rules to the road now.
Yeah, but I think from a product side, right, and from the technology side, let's also break it down. I'm comparing it to a modem. They are saying every agent, which is directly custodial or non-custodial related in this space, has to be taxed. This is like saying every router and every modem needs to have a fee if there is an internet associated with it. It just doesn't even make sense with respect to basic. What if I'm a miner, I'm a validator, I don't even hold your crypto. I have no idea whose crypto it is. So being a router or being a modem in your house, how do I get taxed?
Yeah, Kavita, here's another one. So, and I think a lot of this is about a power grab for the FTC. At the end of the day, this is politics. And we keep hearing these products.
Is it SEC or is it CFTC? Because I'm also very confused. They keep on going on Twitter and asking who has the real authority over some of the things CFTC commissioner talking about.
Yeah, and at the end of the day, a lot of these products are retail products, especially in the stablecoin market. And if we take all of these products and define them as securities, pull them within the SEC's jurisdiction, there's actually going to be less consumer financial protection. The SEC is not a consumer regulator. You have the CFPB, you have state regulators that are really the experts and who have the teams to oversee consumer protections. That's not the SEC's role. And again, I think a lot of those statements yesterday were about trying to expand the power at the SEC. And we really need to think about how it could impact consumers before we do that.
Yeah, and I think going back to your question of if I have to say 3 things which if I can advise, one would be having every node, every uncustodian wallet in the space for taxing doesn't make sense. Second thing I would add on the top of it, if USDT or any stable coin is supposed to be a commodity, is supposed to be an asset, just come out and build a rule around it. And the DeFi industry is so agile, it will work it out, figure out stable coins. And the third and the last important thing is I personally think that just taking out Coinbase as an example, because a really strong CEO has a mind of his own to come out on Twitter, and they're just having them
Showed myself some love with the self gift. That's funny. Love that. Oliver approved, I'm sure. We'll have to share it with your wife. Thank you for the follow, Miguel. Let's see what else. I don't care what that is. It awards extra points, plus don't have to deal with unexpected sub renewal. That's true. That's smart. I didn't even know you could gift yourself. Let's see this one.
what we did in the series of moves recently around China, we have taken our position down significantly, but stayed with a few of
what
the
would it take
low
for you to
margin
turn?
moves.
To invest more. What would you need to see?
What would I need to see? I think it would be Xi Jinping saying, you know, whoops, we made a mistake, we're open for business. I don't think he'll do that. So I don't think we'll be hugely involved with China.
Sort of a reflection of what's her distaste for Chinese names. By the way, still very active in crypto and Ether in particular.
Yes, I'm an Ethereum guy, just because I think it's more easily used. What happened yesterday, I had Mark Bristow on last night. Dr. Mark Bristow is the CEO of Barrick.
Yes.
And again, we often compare gold as a source of value versus, say, crypto. And Mark's taking a longer-term view more than, say, 10 years. Say in 10,000 years, and gold seems to have held its value to some degree, but people are getting a little upset that gold hasn't soared in an era where we all feel that inflation.
Gold is down 6% for the year.
I know. How do you like that? But I like
or
what,
roughly. I'm looking at the GLD. I shouldn't say.
That's right.
That's right. Yeah.
But Kathy Wood, I mean, when you take a look at what did come out of the Chinese last night with the idea that maybe Macau should be diversifying away from gaming. Well, that's like. Vegas should be a little more like, I don't know, they should take up manufacturing semiconductor. No, I mean, the idea of Macau is gaming. So if you're going to make it less dependent on gaming, that means you're probably going to hurt gaming, not boost all sorts of other business. We look at this.
Yeah.
Every day we come in and people say, you know what, they're done. They're done.
Oh, today it was the civilized internet. That's what their goal is, a civilized internet in which they will regulate the flow of content and information distribution.
Well, I mean, look,
I like the words. Civilized internet sounds
we could
good.
use a little bit of that, I guess.
We certainly could use a little more civility, but you can't police things.
No, and I do think that anybody who's... My wife was in China for 18 hours 2 years ago. Burnerville. Right? Yeah, Burner. It's like The Wire.
Yes, you have to take your burner
China.
phone. Yes.
Burner.
Yes.
What? Bitcoin and why cryptocurrencies will fail? Okay, let's listen to this shit. Oh my god. What a dumbass.
Bitcoin.
Oh.
A new creation that is going to change our everyday finance and
I want to see the comments on this. Make this into a meme NFT, then maybe be worth something. Sounds like he's mad he didn't buy at the dip. The more dislikes this has, the more valuable Bitcoin is. I just want to listen to some of it.
How we use our money. It was created by an anonymous person or a group of people working under cryptonym of Satoshi Nakamoto. Every day we hear in the media how good they are and how many possibilities cryptocurrencies can create.
Mm-hmm.
However, what about the negative sides? Bitcoin?
Okay, what about the negative sides of fiat? You want to do that? I mean, we could talk about why, the negatives of crypto. That's totally fine. But saying that it will fail when, obviously that's an opinion, and it's not failing us. It's only getting better, so this is kind of funny.
Has already been once classified as a speculative bubble. Yet, a new frenzy in 2021 is occurring. Recently, Elon Musk made a huge bet by buying almost $1.5 billion worth of Bitcoin and reported that his company, Tesla, is going to accept payments made by cryptocurrencies. It is, of course, set to increase the demand for a currently speculative market to become a real one. But there are some fundamental problems that will cause that Bitcoin and other cryptocurrencies will fail one day. First of all, I need you to ask you a question. if you were ever able to actually buy anything with Bitcoin.
Which you can.
Most of you have never even heard of places where you can
send Kiss to Brazil.
Buy things using it. And if you did, then you of course heard about the previously mentioned Tesla, probably Domino's Pizza, and of course Darknet. Most of the illegal internet sites operating in the dark.
By the way, Bitcoin or cryptocurrency is traceable. This whole cryptocurrency is untraceable. No, it is. It's public. It's out there. You could find out where people are sending, what wallet's going to what wallet. That is there. That information is known to anyone. Not the banks, not just the banks, or not just to the holder, everyone. So again, yes, people use it on the dark web, but you know what people used before cryptocurrencies on the dark web? Fiat! And they still do. They still do. So this argument's already flawed.
Which sell drugs, guns,
people use the dollar for this stuff. Shit. Get rid of the dollar because the people can spend money on bad things, guys. It's not the currency. It doesn't matter what currency. It doesn't even matter if the currency is like nail clippings. It doesn't matter if the currency was fucking beanie babies. It doesn't matter what the currency is. People will still do illegal shit. Period.
Child pornography operate by Bitcoin payments. And it is done because of its anonymity. This anonymity that is supposed to be the biggest advantage of Bitcoin over other tradable goods is actually helping organized crime groups, terrorists, and countries willing to evade international sanctions.
Not unexpected. The central banks will try every tactic to discredit other monetary systems. Fiat is so bad, yet they don't want to give up that cash cow and are repressing everyone. And have they ever heard of laundering?
As to transfer their money from one place to another without extensive money laundering. While many people like comparing...
Which again, money laundering existed before cryptocurrencies.
Bitcoin to gold, when it comes to illegal trade, there are some fundamental differences. First of all, our yellow shining resource is heavy and hard to transport. And in order to finalize a transaction, you need to meet the recipient in person. Here, the advantage of Bitcoin, being a pure line of ones and zeros, comes to play. You can buy absolutely anything you need to commit a crime by just one click on your phone, and no federal authority will be informed about your potential illegal transaction. Another problem with Bitcoin.
How do you know that? How does he know that?
Bitcoin is its lack of cybersecurity. While you're making a transaction through a centralized institution such as a bank,
are you fucking kidding me?
There are several procedures they need to follow, as well as regulations in order to reduce any risk of theft. But when it comes to Bitcoin, these regulations barely exist.
Are you fucking dumb? It self-regulates itself. It has to confirm. Oh my god, he doesn't understand blockchain, bruh. Bruh, he don't understand. Homie just said there's no security, there's no way, like, no. Oh my. Sorry.
Until 2018, more than 980,000 bitcoins were stolen just from crypto exchanges.
And you know how they get stolen? People click on links, just like they click on links in emails and scams and give their crypto wallets what they shouldn't do, just like you don't give your credentials or your payment information on sketchy websites. That's how they're being stolen. All right, that could be said about fiat. It's not anywhere different. Who is he exactly? Who is he? Victor Jazuk. Either way, what he's saying is people got scammed. Yes, there are crypto scams, because guess what? There are scammers. It still involves a human being to make things that don't, to not make mistakes. And guess what? People make mistakes. Crypto is a tool. People can use that tool in a bad way. Now, if you're giving or you're posting your wallet address or, your exact amount of crypto that you have, yeah, you're going to be vulnerable to attacks. Just like if you give your account number or your login information to your bank account. And guess what? More money gets scammed from fiat than it does with crypto. So again, this argument flawed. Yes, it happens. Bitcoin, but it's worse with fiat.
Value? It is more than 50.
How are you? He's telling us that fiat's better? Like, no. There's still. I can't give you more peers. That's not based on me. If you're trying to shit on a different type of payment, a different type of currency, at least back it up. And he's saying like, oh, banks have security, da-da-da. No, it doesn't. Not in the way that you think it does. It can't tell. Now, yeah, sure, it'll be like, oh, are you sure you want to purchase this? And, if it's a big payment. But when someone has that information, it could still easily be hacked. It could still easily be scammed and taken your money.
$50 billion. And while there were some attempts to regulate the crypto trade, most of them are still inefficient and leaky. Thus, the concerns still remain, and further action is still needed.
He sounds mad.
The most well-known country for banning crypto trade is China.
Okay.
It has completely banned initial coin offerings, as well as it only allows exchanges to facilitate.
Okay. China bans a lot of weed. Oh, because a country bans it, it must be bad. Like, what? I was on Facebook the other day and a friend chatted asking, question, is this your pick? Link was attached. I quickly clicked without thinking and then realized I might be letting in a hack. Yeah, never click on, because some people get hacked. So sometimes they send you random links. So never click on, random links that look sketchy. Always be careful about, clicking on them, because you click on that, you could give them access to your whole computer. It's scary. That's why you have to be careful. But what is he going to say about
selling?
What is he going to talk about China? Okay, we get it. They banned crypto. There's lots of people who ban crypto. There's lots of people who also banned weed. What fucking point does this make?
Chinese financial institutions are also forbidden from any sort of trade regarding crypto.
You know what else China does? And they have a social credit score to where they have cameras almost everywhere. So if you jaywalk, your credit score goes down. Okay? Imagine that in the US. It's so totalitarian. You fucking, cross the street without, fucking on the, without the light signaling you to go, your credit score goes down, and guess what? You can't fucking get it at home. Imagine that. Exactly. In public places, you're seen throughout. Also, they can't use certain apps like Twitter and stuff, or Twitch and stuff. They have to have their own specific apps created so the government can track and see what they're doing. So them banning crypto is not anything different from what they've been doing, which is banning the freedoms of the Chinese civilians who live there. Or just civilians who live in China, because not everyone in China is Chinese, obviously. Lots of people live there. and want to enjoy, their families and their livelihood, but they can't because they're so scrutinized in this regime of just total control. And it's so sad. It's so horrible. So I don't speak bad about China. I speak criticism about their specific government. I think China banned crypto, so their digital money would be the only one allowed for use to control the people, and which they've been doing for years now.
Despite all these measures, crypto mining has not been addressed until recently. Oversimplifying it, a new Bitcoin is created every 10 minutes. And people with decryptive algorithms are trying to guess its serial number. While in 2015, only few people knew about cryptocurrencies, there was much less crypto mining centers that actually competed for getting one. But while the demand went up and up and up, more new crypto mining centers opened, and your chance to being the chosen one got lower and lower. And that is why crypto mining centers have increased their computing power in order to become the chosen one, the one that will receive Bitcoin in the end. And this drives the energy consumption to insane levels. University of Cambridge Center for Alternative Finance calculates that solely Bitcoin energy consumption is around 130 terawatt hours. And this is equivalent to the consumption of developed nations such as Sweden, Norway, or the United Arab Emirates. And this is only Bitcoin, with exclusion of Ethereum and other cryptocurrencies. As most of the world energy still relies on heavily polluted fossil fuels, we can estimate that solely Bitcoin consumption is around 0.43 gigatons of carbon dioxide. And just so we can compare it, it is more than most the European nations produce, and something close to Australian emissions. This is not the way to how to build a new and revolutionary currency for the 21st century, while we are already struggling to lower our emissions and save us from the climate disaster.
All right, then stop the fiat
let's
system.
get back to China.
Let's stop the fiat system. Where's the fiat emissions? You want to show that? You want to show the counter? Because again, you're saying that Bitcoin and cryptocurrencies will fail. Okay, and you're showing that CO2 emissions from them are so high. Okay, I need a comparison. Which is better, cryptocurrency or fiat? Now show me the fiat. Why isn't you showing, whenever you have an argument against something, you're supposed to back it up with saying, yeah, the reason why, if you showed me cryptocurrency, you see the high CO2 emissions and that's terrible. So it's, but look at fiat and look at how low our CO2 emissions are with fiat and it's so much cleaner and blah, blah, blah. If you showed me that, I'd be like, okay, valid argument. No, completely flawed. He's not showing the other side. He's only showing, one-sided, of course, what's bad with cryptocurrency, what's bad with Bitcoin, but he's not showing, the comparison of the, the better version. So that's why this whole TED Talk sucks.
Recently, there was a change in Chinese
terrible
politics, and now they're trying to favor renewable energy sources. In the region of Inner Mongolia, no new crypto mining centers will be opened, and the currently existing ones will have to be shut down, as in order to cut down on the strategically unneeded power consumption in order to achieve sustainability. And the main question arising from it is, will it become a global trend, or will the Chinese province be an exception? Another aspect that determines the strength of a currency is its stability. And Bitcoin lacks it. As we can see, there are some significant fluctuations in its course, and no one can accurately predict its price in the next 2 months. Let me ask you a question. Would you be willing to accept a payment made by a friend who owes you $100 in an asset that could be worth $200 or $4 in the next 2 weeks?
Oh my God.
Probably
The volatile. He's talking about the volatility. The reason why. Oh my God, we're attaching the you still have 5 Bitcoin. Even if the price of Bitcoin goes down, you still have 5 Bitcoin. But guess what? The price of it only matters if you're wanting to cash out to USD and use it for real stuff like that don't include Bitcoin. But for the things that are already having cryptocurrency as its form of payment, you don't have to worry about the fucking volatility or the price of the fucking coin because it will adjust. Oh my God, it's such a hard concept, I know.
Most of you would answer no, as people tend to have risk-averse preferences. And getting paid...
and not even just that, it's just like, hey, thank you for the raid, sweetheart. Even if the Bitcoin, let's say headphones cost... I'm trying to use a different type of currency but let's say it was really expensive. Let's say like this house was 5 Bitcoin, right? It doesn't matter what the price of Bitcoin is. They set it at 5 Bitcoin, period. Doesn't matter the value of the Bitcoin. They set it at 5 Bitcoin. It will still be 5 Bitcoin because they're not doing it by, if they wanted to go by the dollar, they would go by the dollar and ask for a dollar payment. But they're asking specifically for 5 Bitcoin. That's it. So it doesn't matter what the price will be tomorrow. It just means that, the price to the dollar, attached to the dollar went down, which happens with the current fiat system. Current value of the dollar goes down because we keep printing money right now. So yeah, I just find it funny.
In such an asset would be extremely risky. There is no central bank standing behind it that could guarantee that the future exchange rate is going to be at least close to the one today. It is all set by people willing to buy and sell, which, as history shows us, can change drastically over time.
Thank you for the fellow world news.
Following this instability, Bitcoin lacks a crucial aspect needed for it to become an international currency, which is a popular argument made by Bitcoin enthusiasts. After all of you heard what I said, probably most of you wonder, why is the price so high then? And well, the truth is I only touched the negative aspect and barely touched the positives, which there sure are. No matter the less, remember that speculative bubbles have been occurring throughout the history, starting from the famous Mississippi bubble that nearly overturned the French economy in the 18th century, to some more recent ones, such as the dot-com bubble in the 90s and the housing bubble in the early 2000s. And currencies are no different. And the only question is, when will someone press the check button again? As for a commodity with no future, Bitcoin will fail one day and die naturally or by dying under the needed regulation.
Oh God. All right, buddy. I'll see you on the other side. This is hype versus fact. Oh no, don't tell me, Edward. Now I'm scared.
You know those cash counters that you see at like the bank, you know, they put like a stack of money, it's like, and it pulls it through and it says, these are, you know, of these bills, or these are 30 of these bills, or whatever. Like you can sort it and do all kinds of things. Those cash counters now, they actually scan the serial number of every bill. And they keep a database of every serial, of every bill that they scan, even when they're going by, like, 130 seconds. And guess what those cash counters are now? Yeah, they're networked, right? And so this is the thing. The same thing is happening to our postal mail, the USPS in the United States.
Hello, Darth. TDS, what's up?
For every piece of mail now they process. And these are just the challenges that we face, right? They see it as metadata. Like maybe they don't know what you spent that money on, but they know that that cash was deposited by this person at this bank, eventually, this business. And the last time that the system writ large saw this bill was over in this state or that, it was withdrawn by this person at that time. And we have no idea how the federal government is using these programs. We have no idea how the banks are using these programs to perform sort of surveillance and lending analysis of how sort of financial flows occur. But then, as you say, then we get cryptocurrency. Now, cryptocurrency, and by this,
New instant code, guys,
is really failing comprehensively, terribly on the privacy angle. And I've said this again, and people are like, oh, Taproot, look at what Taproot actually does. Taproot does not fix Bitcoin's privacy problem. And there's some arguments that it makes it worse by this sort of fragmented address space, making forensic sort of flow analysis easy for each. This kind of wallet is using an ancient address. They sent a payment to this new person with a new form of address, right? But the change address went back to the old one. So even though there's one input, two outputs, you can tell one was a payment and one was a sort of a refund or a change event. Shouldn't be like that. There's no reason for it to happen. We see so many different privacy coins. Zcash, I have said repeatedly, really does the best in this space with their shielded transactions. The criticism is that these system transactions don't occur by default, which is valid. In my opinion, they should happen by default. There are other cryptocurrencies like Monero, privacy coin, which is having a lot of trouble being listed on exchanges broadly, which has sort of privacy by default, but it's a lower measure of privacy.
Thank you for the sub, Darth. I appreciate
those
you.
Really don't last forever. Technology does better and better, and we haven't seen legally this in the kind of way that we want to see it done. But they're both great projects, and there are many other privacy coins out there. But like you said, we see exchanges starting to go privacy. That's scary. The way that you fix this, the way that you normalize this, is you make Bitcoin private, right? And I mean the main chain. I'm not talking about putting on layer 2. I'm not saying Lightning shenanigans, right? You have to make the idea cryptocurrency is private by design. And once you normalize that, it's fait accompli. And it's really frustrating, I think, for a lot of people in the space that the core development team for Bitcoin has not prioritized this, because the longer they wait, the more obstacles are going to be put in place to prevent that from being the case. Right now, Bitcoin really can't be delisted by exchanges. And the sooner we take advantage of that, the better off we will be. And this was never the norm historically. A lot of this flew out of like September 11th with like counterterrorism financing. And like counterterrorism financing at like Bank of America, like we want terrorists to be sending financial flows over Bank of America, because then we know what they're doing, we know who it's going to, we can knock on their door and like we can blow up their house, right? The way we deal with these things is really crazy, because we structured these new policies in panic. I'm sorry, I didn't mean to jump in there, but I think it's important. Actually, maybe you could tell us a little bit more about that. When did these things just start to change from this old paradigm things were in terms of what the government can get from banks and what they can get from right? It's no longer your record, it's the bank's record. So the government doesn't need a warrant or anything like that, because the bank can voluntarily. Yeah, I mean, I think it's strategic. I think if you asked a lot of these people privately, they would all say they hate it. They would all say it's easy. They would all say they don't do it. But at the same time, I think a lot of these guys...
Have you checked out Luna? Guess they got an upgrade end of month that could make it pump. No, what's Luna?
Regulation, right?
Did you know that decentralized finance is not all that decentralized? Besides the fact that many DeFi protocols are operated by a single company or a small collection of individuals, The stablecoins, which make up much of their total value locked, are all centrally controlled.
I do know that.
Not only that, but most of the trading volume in cryptocurrency comes from stablecoin trading pairs. Now this is a problem, because if a regulator were to shut down these stablecoin issuers, it would take out DeFi and rewind the clock on the crypto market by a few years at the very least. Now that the big banks are starting to notice just how many billions are leaving their balance sheets and heading to DeFi protocols and crypto exchanges, they've been pushing regulators to do exactly that. This is just one of the many reasons why Terra has been a top performer as of late. Its UST stablecoin has been gaining popularity as the decentralized alternative to USDT, USDC, and BUSD. Today I'm going to give you a quick rundown of Terra, bring you up to speed on some of its most recent updates, briefly review a few of its promising DeFi protocols, and
never heard of Terra or Luna.
Is headed.
Luna. I thought you meant Luna like my cat. My cat's name is Luna.
Before we get decentralized, there's a disclaimer I need to describe. Nothing in this video is financial guidance of any kind. It's just entertaining, educational content to help you grow your mind. If you're here because you fell down the crypto rabbit hole, my name is Guy. Make yourself at home. The Coin Bureau has some of the highest quality crypto content you will ever know. Coins, tokens, exchanges, news, reviews, tutorials, regulations, taxes, and market moves. I do it for the knowledge, but I must admit the views are great too. If you're sick of Moon Boys who are all hype, subscribe to the channel and ping that notification bell.
Like a shirt, the evolution of crypto.
I know life can get crazy, which is why I always leave timestamps in the video description to skip around if you're feeling short for time or just feeling lazy. You should know that studies suggest that watching Coin Bureau videos until the end is always best. So now that you're up to speed, let me tell you about Terra.
This was where I got my info.
If Terra is new to you, here's everything you need to know.
Okay, good.
Terra was founded in early 2018 by business entrepreneur Daniel Shin and computer scientist Do Kwon. Terra was built by Terraform Labs, a software development company based in South Korea, which was incubated by a conglomerate of South Korean e-commerce companies known as the Terra Alliance. Terraform Labs raised around $33 million across various funding rounds in 2018, and the Terra mainnet went live in April 2019. In a sentence, Terra is an ecosystem of decentralized stablecoin tokens, which are collateralized by the Luna coin, and the first Terra stablecoin was the KRW token for the Korean won. Terra's KRW was integrated into the popular Chai mobile payments app in 2019 and is used by nearly 2.5 million people in South Korea. Today, Terra offers more than a dozen decentralized stablecoins, the most popular of which is UST, or the US dollar. To mint UST or any other Terra stablecoin, an equivalent amount of Luna must be burned. So, as a simple example, if 1 Luna is worth $10 US, burning 1 Luna would mint 10 UST. Now, because UST can also be burned to mint an equivalent dollar amount of Luna, this creates the economic incentive necessary for UST to maintain its peg. If UST is trading at, say, $1.50, Luna holders can burn their coins to mint UST and make a 50% profit. Eventually, this process brings the peg back down to $1 due to the increased supply of UST. Now, alternatively, if UST is trading at 50 cents, UST holders can burn their tokens to mint Luna and make a 2x profit. This reduces the amount of UST in circulation, restoring the $1 peg. So every time Luna is burned to mint UST, a small fee is taken and put into a community treasury to fund new Terra projects or protocols. This ingenious system is made possible by Terra's proof-of-stake blockchain, which was built using the Cosmos SDK. Terra's blockchain can handle a few hundred transactions per second, and it has 130 validators. These double as oracles, which check the exchange rates between Luna and Terra's various stablecoins. Though there is no minimum stake on Terra for validators, the staked amount of Luna must be large enough to place in the top 130 validators by stake. Any delegated Luna is counted towards this number. Staking rewards for both validators and delegators are currently just shy of 6% per year, and any staked Luna takes 21 days to withdraw.
Okay.
Note that Terra does slash the Luna stake of any misbehaving validators. Now, Luna had an initial supply of 1 billion, which was allocated as follows: 30% to Terraform Labs and its employees, 20% to the Terra Alliance, 26% to investors, 4% to exchanges for liquidity, and 20% for stability reserves in case of any crazy market volatility. I should point out that Terra technically has a dynamic maximum supply of 1 billion. Basically, if there is less than 1 billion Luna, new Luna are gradually minted, and if there is more than 1 billion Luna, the excess supply is gradually burned. Now, if you want to learn more about how Terra works, you can watch my previous video about the project by using the link up there in the top right. Over the last few months, Terraform Labs' investment arm has dished out millions of dollars to crypto projects looking to leverage Terra's UST stablecoin, Terra's stable savings protocol called Anchor, and/or Terra's synthetic stock trading platform called Mirror. The first project to get some green was Cash in March. Spelled with a K, Cash is a user-friendly front-end application that's plugged into all three of Terra's flagship protocols. Another project to receive funding was Loop Finance in April, whose Terra-powered AMM DEX will be the back end to the Loop Wallet, a food delivery app which will allow users to pay using any Terra token. Also in April, SPA Protocol got paid to create a decentralized hedge fund that allows so-called pool managers to invest Terra tokens on behalf of their clients in a trustless manner. In May, Terraform Capital turned the spotlight on the Harpoon Protocol, which will develop a platform to make it possible for non-technical users to buy up any cheap collateral being liquidated on Anchor. Less than a month later, Pylon Protocol took the stage with its Launchpad service, which redirects Anchor savings yields to new projects building on Terra in exchange for their tokens, among many other things. If that wasn't crazy enough, Stader Labs promised in June to take staking on Terra and other POS cryptocurrencies to the next level with its next-generation staking dashboard, which will allow for liquid staking and, quote, Yearn Finance-style strategies on staking rewards. More recently, Terraform Capital invested into Nexus Protocol, which hopes to make it possible to maintain stable yields from any funds deposited into Anchor Protocol, even when the market is crashing. The Terra dApp that people are really itching for, however, is Ozone, a decentralized DeFi insurance protocol, which was first detailed by Terra co-founder Do Kwon in May on Terra's governance forum. Without getting too technical, Ozone will use a portion of community treasury funds to ensure the UST earning interest on the Anchor protocol. Now, obviously, it's quite a bit more complicated than this, so I'll leave a link to Do's full post in the description if you want to learn how Ozone actually works. As you can imagine, the news about all these amazing dApps made the rounds at various VC firms, and over a dozen of them banded together in June to create a $150 million ecosystem fund to kickstart even more Terra projects. The list included some of the biggest names in crypto, including Pantera Capital, Arrington XRP Capital, Block Tower Capital, and even Galaxy Digital. And speaking of massive amounts of funding, Terra announced the completion of its back end for the second version of Solana's Wormhole Bridge, which should be going live in the coming weeks. This will make it possible to move tokens between Solana, Terra, and Ethereum in a fast and decentralized way. Oh, and if you didn't get the reference about the massive amounts of funding, that's probably because you didn't know that Solana has seen more funding than any other cryptocurrency project this year. And you can learn more about that by watching my video about it using the link up there in the top right. All these announcements and developments have had a predictable effect on Luna, which recently rallied way past its previous all-time high. This effect fundamentally boils down to the increased demand for Luna to mint UST, whose market cap has also grown exponentially over the last few months. Most of this demand for UST has come from Terra's DeFi protocols, and these have about $7 billion in total value locked between them at the time of shooting. If I'm not mistaken, this actually makes Terra the third largest cryptocurrency blockchain by total value locked, the first being Ethereum, and the second being the Binance Smart Chain. Now, on that note, Terra's team and community have been pushing hard to get UST on as many cryptocurrency blockchains as possible. UST can currently be found on Ethereum and the Binance Smart Chain, and Solana seems to be next in line. This is logical, given that Solana is the next largest cryptocurrency by DeFi TVL, at least for now. Some of you may have also seen the news that UST had listed on Coinbase in early August, which was a somewhat surprising move to say the least. I'll explain why a little later on. In any case, Coinbase's UST listing seems to have been the spark which sent the Terra rocket to the moon. And this begs the question, how high could Luna go? If you watch my video about my top crypto picks for the rest of this year, you'll know that Terra is on that list, and I mentioned that Luna could hit $100 by 2022 if demand for UST continues to rise. I stand by that prediction, though I think it is possible that Luna could climb even higher than $100. This is because Luna's market cap is just $12 billion, which I would argue is a low valuation for a crypto project as terrific as Terra, especially with all the centralized stablecoin FUD flying around. My only concern is that there might be Luna whales selling behind the scenes. After all, most of Luna's supply went to Terraform Labs, the Terra Alliance, and early investors. Although Terra's own blockchain explorer doesn't show you a rich list, another Terra blockchain explorer built by Flipside Crypto does. As you can see here, about a third of Luna's supply is held by whales, and almost half of Luna's supply is held by the, quote, foundation, which is probably Terraform Labs. Flipside Crypto's Terra Explorer also gives a fairly limited Luna rich list, and it's enough to see that a lot of Luna's supply is being held by exchanges, which is certainly a good sign. If you're wondering why all this stuff is so important, you need to watch my video about cryptocurrency tokenomics, and you can find it up there in the top right. In terms of what Terra has planned going forward, there's a huge update right around the corner. Columbus 5 is slated to be the most significant upgrade Terra has seen since its mainnet launched, and it will introduce 3 new features to the Terra blockchain. The first is the burning of all seigniorage fees. Now, seigniorage is just the fancy term used to describe the small fee for burning Luna to mint UST. As I mentioned earlier, this fee goes to the community treasury. Now, the thing is, Terra's community treasury already holds over 93 million Luna, which is worth a whopping $2.8 billion. If I'm not mistaken, this would make Terra's community treasury the largest of any cryptocurrency project or protocol. In any case, it's safe to say that Terra's community doesn't need any more funding, so Columbus 5 will burn all seigniorage fees instead of redirecting them to the community treasury. This will add deflationary pressure to Luna, which could potentially increase the value of the coin and, by extension, the value of the community treasury. I think they call that a win-win. The second feature Columbus 5 will bring to Terra is interoperability with Cosmos's Inter-Blockchain Communication Protocol, or IBC. As mentioned in my most recent video about Cosmos, the IBC basically makes it possible to connect every cryptocurrency blockchain together. Now, I know what you're thinking. There are dozens of bridges between cryptocurrency blockchains already. What's so special about the IBC? Well, imagine you have wrapped Bitcoin on Ethereum, and you want to transfer your wrapped Bitcoin to the Binance Smart Chain. Well, you'd have to unwrap the Bitcoin by sending it back to the Bitcoin blockchain and then rewrap it again for use on the Binance Smart Chain. Not very efficient, is it? The IBC works by bridging all blockchains to a single hub. In this case, that's the Cosmos blockchain itself. With the IBC, you'd be able to move your wrapped Bitcoin on Ethereum to the Binance Smart Chain directly without having to go back to Bitcoin as a pit stop. This saves you lots of time and money. The importance of Terra in this equation is, of course, UST, which would become the decentralized stablecoin used for trading cross-chain assets on the IBC using Cosmos's next-generation DEXs. The third feature Columbus 5 will bring to Terra is Ozone, the decentralized insurance protocol I explained earlier. Columbus 5 will also officially enable support for the Solana blockchain via the Wormhole Bridge, and all of this stuff is set to happen at the end of September, specifically September the 29th. Though my belief that the bull market will top in mid to late September has been shaken by the recent dip, all these September dates are helping me keep the faith, and you can learn all about the other bullish and bearish events coming our way using the link up there in the top right. Now, if you've already watched that video, you'll remember that one of the black swan events we could see is a crackdown on DeFi by the United States Securities and Exchange Commission, or SEC. Yup, those guys again. Terra founder Do Kwon is hyper aware of this threat, and in a recent tweet thread he noted that, quote, DeFi/crypto is at war as I see it. Decentralizing the monetary of major blockchains, i.e. UST, is the only way to make sure crypto remains free. As you might have guessed, Terra's status as a stablecoin issuing protocol has put it on the hit list of regulators around the world, and the first one to lash out was the Thai SEC in late March. It warned against Terra's illegal Thai baht stablecoin, and later announced that it will begin regulating stablecoins later this year, requiring issuers to register with the Thai SEC and abide by banking laws. The US SEC has been vocal about stablecoins too, and though no formal actions have been taken yet, it seems like it's only a matter of time before they start sitting down with Tether, Circle, and Paxos and giving them the Coinbase treatment, if you catch my drift. You might also remember that Ethereum-wrapped versions of Terra's mirrored stocks were some of the tokens that were delisted from Uniswap, which is now apparently under investigation by the SEC. Obviously, synthetic stocks of any kind are a big no-no. Do has been asked about DeFi regulations in recent interviews, and what he said was an eye-opener to say the least. For starters, Do points out the fact that nobody has seriously priced in the incoming crackdowns on centralized stablecoins. DeFi needs to transition to decentralized stablecoins to survive, and Do rightfully points out that any stablecoin that can be regulated is not decentralized. While Do is a huge fan of MakerDAO's DAI, he doesn't believe it can scale. A lot of the DAI in circulation is also collateralized by USDC, which is obviously an issue if something happens to Circle. Interestingly, Do isn't all that worried about US regulators because Terraform Labs is based in South Korea. If the US SEC does come knocking, though, Do plans on dissolving the company and going completely decentralized. He reckons this should be safe because writing code is not against any laws anywhere. Now this brings me to the final topic I want to tackle today, and that's whether Terra's UST could become cryptocurrency's decentralized stablecoin. I'll start by saying that Terra's Thai baht stablecoin is still available on Terra Station. That's a pretty bold statement if you ask me, and it shows how committed Terra is to the ideals of decentralized money. However, the fact of the matter is that Terra is still very centralized. A lot of the development is done by Terraform Labs, and almost all the projects building on Terra were funded by Terraform Capital. This will likely change now that there's another $150 million of VC money on the table, but something tells me that decentralization is lower on the list of priorities for Terra's new backers. The last thing they would want is for Terraform Labs to shut down and go underground. It's worth pointing out that this is something that would be pretty easy for Terraform Labs to do, given Terra's community treasury has enough cash to last until the end of the century. As far as I can see, the biggest barrier to Terra's UST becoming crypto's decentralized stablecoin is liquidity, aka exchange support. Terra's relative centralization probably means Luna is considered a security by regulators in the United States. In plain English, it's more like a stock in a company than a currency or commodity. My evidence for this is the fact that Luna is not listed on any US exchanges, because I'm sure they would list Luna in a heartbeat if this was not the case. If you've tried withdrawing or depositing UST on Coinbase, you'll know the only option is wrapped UST on the Ethereum blockchain. You can't deposit from or withdraw to the Terra blockchain directly. This is a clever side door to compliance on Coinbase's part, and I would argue it showcases Coinbase's own commitment to decentralization. Anyways, I reckon Luna's lack of liquidity relative to its size makes it much harder for UST to become cryptocurrency's go-to stablecoin. The worst part is this will only get more difficult over time as regulators continue to rein in rogue cryptocurrency exchanges. Even if Terra becomes fully decentralized, centralized exchanges will not hesitate to delist Luna or UST if they're pressured to do so, and that would cause all sorts of issues for UST and Terra's ecosystem. Perhaps I'm just being pessimistic, though. Terra's interoperability push might be on the regulatory hit list than some. With a bit of luck, Terra will gain enough adoption to sustain itself by its own right, and something tells me people will flock to UST if regulators move to take out USDT, USDC, and BUSD. That's not something I would advise because compliance is key, right guys? Well, that's all for today's diatribe about Terra. Hit that like button if
Everyone seems to want in on this cryptocurrency boom. Bitcoin topped $58,000 for the first time ever in February 2021.
Bitcoin spiking, as we learned just moments ago that Tesla bought $1.5 billion of the cryptocurrency.
Bitcoin crossing 50,000 for the first time ever.
It's not going to be a straight line, Judge, but it's going to 100,000, I think, in 2021.
The more people that own and use it and then begin to transact on it, the more valuable the Bitcoin is itself.
Ether, the world's second biggest cryptocurrency, has also been hitting new record highs this year. And even the price of Dogecoin, a cryptocurrency invented as a joke that doesn't have the same serious function and institutional backing as something like Bitcoin, surged more than 50% after an Elon Musk tweet. While it's easier than ever to buy a small fraction of one Bitcoin using, for example, an app like Coinbase, that's not the only way to get your hands on crypto cash. You can also mine for it. Before the pandemic took hold in the US, we went to a blockchain production studio in Brooklyn to learn how to mine for Bitcoin's biggest rival, Ether. Here's how it works and how much it costs. Digital mining is kind of like real-life mining, except that instead of shovels and dynamite, it's accomplished with software and computers. A miner is essentially just running a computer program that solves a complex math problem. Solving that math problem is how crypto transactions are verified, so that money correctly moves from A to B. The miner who solves the problem first is awarded crypto cash by the algorithm for their bookkeeping efforts.
In the 12 years of history, not a single entry on its blockchain has been fraudulent. Now, they've processed probably close to $10 trillion of transactions and not a single false entry. In that same 12-year period of time, what percent of banking system activity was false? It's probably close to 7 or 8%. To achieve that kind of security while being completely permissionless, anyone can actually transact on this. I mean, that's a pretty incredible feat.
Can you explain to me what we're looking at right now?
So this is an Ethereum mining rig, and this is just like any other computer that you would build on your own, only instead of having an actual case that all the components live in, it's in an open area like this. And you need to do this because when the GPUs are running, they get really hot, and it's important to have like a lot of air circulation.
Lee learned how to mine watching YouTube videos. This was back when he was still mining in his spare time. And so the main components here, this is your power supply, this is your motherboard.
This is what wires up all the logic on the computer. You need to have an operating system running on your motherboard. So this is an SSD isolated hard drive, and I have a specific operating system called FOS installed on this. This is an NVIDIA GeForce GTX 1080 GPU. And this is a graphics card that people use mostly for gaming, but these are also really good for mining cryptocurrencies. Once this is sewed into place, we need to plug it into the power supply. And then we need to plug in the data so that the graphics card can read from the computer, and then plug this guy in.
So what's this last plug here?
So this is a SATA cable. This is so that it can get data out of the motherboard. So once it's all wired up like that, this is ready to go. We can just turn it on and we'll start mining.
You just turned a computer into a rig, a mining rig.
Yes.
All in, this rig costs roughly $1,400 because of the parts that you see here. The only other thing left to do, create a wallet. A wallet is a digital address for crypto cash. Ah! And then how long does it take for it to actually start mining?
This should just automatically start, connect to the network, and knows your address. You'll see it start going in a couple minutes.
When the rig is mining, what it's actually doing is running what's called a hashing algorithm. So it's computing millions of math equations to work out all of those digital transactions. But this mining rig isn't doing all these math problems in a vacuum. It's actually competing against miners all over the planet to be the first person to verify a block of transactions. Someone wins this race roughly once every 13 seconds, and whoever wins is awarded 2 Ether. They also get a transaction fee, which averages out to about 2.3 Ether. But there's a mining pool fee that has to be paid, which is about 1% of the block price, plus the transaction fee. When you combine all three, at today's prices, that comes out to about $6,400. And is everyone using the same hashing algorithm?
Everyone uses the same hashing algorithm. It's completely democratic. It just depends on the hardware that you have and the cost of your electricity.
So the only advantage you would have is if your GPU runs faster than someone else's, or your electricity is cheaper.
Yeah, there's no way to shortcut it.
This rig, with only one graphics card, can run roughly 27 million math equations every second. That sounds like a lot, right? But on Ethereum's network right now, there's 400 trillion math operations happening every second. So Lee's rig in Brooklyn accounts for around 1/15 millionth of the entire Ethereum network. That's why people join something called a mining pool. A pool lets a single miner combine their hashing power with thousands of other miners all over the world.
They could be in Afghanistan, they could be in Dubai, they could be in Europe or South America. You're all sharing your resources together, and it doesn't matter where you're physically located.
So you are working together with these people to compete to solve a block faster than anybody else.
It's one giant competition between everyone that's on the network. So it's a race between you and your computers and the computers in your mining pool versus the computers in other mining pools.
Let's fast forward an hour. Teaming up with my mining pool, here's how much I managed to rake in as a miner. Okay, so is it actually worth it to spend all of this money on gear and electricity in order to mine for crypto coins? Let's look at the math. Our one graphics card rig costs roughly $1,400. Tack on 5 more graphics cards, and we're at $4,400. If we run this rig at full capacity with all 6 GPUs, it can earn about 0.348 Ether per month, which is roughly $550. These rigs require quite a bit of power, so electricity cost is a big factor. Where you live in the United States also plays a major role in how much it costs to mine, since there are stark differences in electricity prices from state to state. Alaska, Hawaii, California, and Connecticut have the steepest electricity costs in the country. New York is also one of the priciest states where electricity bills are concerned, so it doesn't necessarily make sense to mine here in New York, but it's a totally different story where electricity is less expensive. Just take Washington State. It's got some of the cheapest power sources in the US, so there, the profits can outweigh the costs. Outside the US, the prices drop even lower. A study released in 2018 by Elite Fixtures showed that countries like Egypt and Kuwait are among the places where it is least expensive to mine for Bitcoin. But one important thing to keep in mind is that the size of the prize that miners win exponentially decreases over time. Back in 2017, it was 5 Ether, but it's been cut down a few times since then. Rewards are now 2 Ether, but again, you get a transaction fee for each completed block, and those fees, something they call gas prices, keep going up. So there's definitely still money in mining for Ethereum. And unlike Bitcoin, there is no cap on the total number of Ether coins you can mine. The supply is endless.
Marco Streng has made millions in cryptocurrency. He started mining Bitcoin in his dorm room. Nearly a decade later, the 28-year-old college dropout turned a single wheezing computer into a lucrative crypto mining empire.
What you're seeing here is the Enigma facility, which is the largest Ethereum mining facility in the world. And it was an exciting time. It was years ago when we came here and built this. And now we're expanding and expanding further and further because the demand is growing and everyone is ramping up the capacity.
If you have the money, you can always buy cryptocurrency. Last year, Bitcoin peaked at almost $20,000. Or you can earn it by running a cryptocurrency mine, a network of computers that serve as the backbone of the crypto economy.
What are these machines doing?
So those computers are miners. They are mining cryptocurrencies, and they're validating the transactions on the blockchain. And they get a reward for that.
So if I pay somebody for something in a cryptocurrency, it's being validated potentially by one of these computers.
Yeah, that's true.
And when somebody makes that transaction, you validate it here in Iceland and you make money.
Yes.
How much does one of these cost to create? If I'm going to create one of these at home, one of these units?
$2,000.
And how many are in here? In this one warehouse
to trade an SFW for BNB with
Mining operations like Marco's were made possible by pseudonymous programmer Satoshi Nakamoto, who in 2009 created Bitcoin, a decentralized digital currency run by no one entity and beyond the control of any one government. But Nakamoto, whose true identity remains a well-guarded secret, faced an obvious problem. If no physical currency exists, who tracks the ownership of a digital coin? To solve this, he created the blockchain, software that records and stores information, like who owns a Bitcoin, on a decentralized ledger shared across millions of computers. It can't be changed, and it's nearly impossible to hack.
The big thing about mining in general is that it's not one single central entity that validates all the transactions. The miners all over the world are validating them.
So this server farm on this kind of moonscape of Iceland, this might replace a central bank.
It's not only replacing, actually, it's making a central entity obsolete.
It's a scam, it's a bubble, it's going to burst, everyone's going to lose all their money.
For some cryptocurrencies, it's most likely true, but I see real value in, for example, Bitcoin or Ethereum. The underlying technology is phenomenal.
I've had people tell me this, that this is the most revolutionary technology that we've seen since the wide-scale adoption of the internet.
Very comparable to the beginning.
Hey, Bob, what's up?
The
Long
beginning
time no
was just a
see.
protocol, very abstract. But now, I mean, we're nearly doing everything in the internet.
Blockchain, which some are comparing to the early days of the internet. It sounds confusing, but listen up.
It introduces so many opportunities, so many unique business models.
People say blockchain could end companies as we know them.
For regulators, it is certainly a concern. You have things like the SEC, you have FinCEN, you have the IRS.
But while the business world scrambles to exploit it and governments rush to regulate it, countries like Russia see a very different opportunity.
My sense of cryptocurrency is largely driven to evade U.S. sanctions and to undermine sovereign currencies. Both of them are a challenge to the national interests of the United States.
We need to search for unconventional solutions. These are the people who will build our new future and live there.
One of those unconventional solutions is the Ethereum blockchain, created by a man named Vitalik Buterin.
Я с большим удовольствием приглашаю на сцену основателя компании Ethereum, главный рок-н-ролльщик биткоина и майнинга Виталия Бутерина.
Raised in Canada to Russian parents, Vitalik is the blockchain movement's biggest celebrity.
If blockchains are as transformative as the proponents are saying they are, then that would imply that eventually we'll see hundreds of millions of people using it in some way or another.
Vitalik created the Ethereum blockchain when he was just 21 years old, and its cryptocurrency, the Ether, is second only to Bitcoin. Its market cap increased by over 10,000% in 2017. Vitalik is on a global campaign to raise awareness of his creation. and its potential applications for business, finance, and government.
Друзья мои, спасибо большое. Давайте поаплодируем Виталик, Влад, Эфирио.
Where are we going now?
We are going to Kazan, which I understand is the capital of the Republic of Tatarstan in Russia. You know, like, I've met government people from Canada, US, UK, Russia, China, Taiwan, Singapore, Thailand. It's usually the central banks want to have a chat, and like, why not?
But you're 23 years old and you're saying sentences like, usually the central banks want to talk with me. That's very rare, I would probably say. I'm older than you and nobody wants to talk to me.
Hi.
Am I riding with you guys? No, we can't.
I think you're riding in this car.
So we're behind a very nice Mercedes that we're not allowed to be in because it's a VIP car for Vitalik, who's treated like something of a rock star here.
The Kremlin rolled out the red carpet for Vitalik, hoping their prodigal son would return home.
Это особый колорит и атмосфера Казани. Это сразу чувствуется. Казань. Вот там вдали мы можем видеть только часть самого крупного медиаэкрана Европы.
Right now we are going to the Unified Presentation Center of the Republic of Tatarstan.
Oh, shit.
This is the place where we make wow effect.
So the government of Kazan is pulling out all the stops for Vitalik. We are on what appears to be hour 3 of a never-ending tour of the city. And what this has to do with blockchain is anyone's guess.
The Russian government's hope is that Vitalik's technology can be as transformative for their own finances as it has been for his.
So I heard about Bitcoin for the first time in maybe February 2011. Eventually, I found a guy who was willing to pay me 5 Bitcoins per article for writing articles for his Bitcoin blog.
And what was Bitcoin worth at the time?
Each Bitcoin was $0.8.
$0.8, so you're doing 5 per article, and now that would be $5,000 an article.
Right.
More or less, okay.
No. You know, being a high school guy with not much money, I thought $1.5 an hour was a fairly reasonable wage, so
That was a good deal to you. $1.5 an hour.
Yeah, fight for 1.5.
Yeah. Explain to me why this technology is so transformational that people think it'll change the world.
Because they represent kind of epochal changes in the options that we have for interacting with each other. With Bitcoin, it's you don't need banks to send money anymore. It's just something that happens directly peer-to-peer. And Ethereum extends that to making digitally enforceable agreements.
That changes whole industries, doesn't it?
And it hasn't yet, but we'll see.
What is it about Vitalik? Why are you so interested in blockchain?
Because Tatarstan is considered to be the innovative republic.
You want to be the sort of Silicon Valley of Russia.
Exactly. That's what we are trying to do.
And Vitalik seems like a guy that could help you do that, right?
He is considered to be like an IT hero, let's say, for young people.
Is that something that the Kremlin in Moscow is happy about?
Yes.
It is?
I think so, yeah.
The Kremlin arranged for Vitalik to meet one of Putin's powerful surrogates, Tatarstan President Rustam Minakhanov.
Вот Роман у нас за информатизацию, за все отвечает. Вот, мой помощник, который тоже такой же любит блокчейны разные. Блокчейн это будет самая справедливая и самая правильная платежная система. Там ни доллар, ни евро, ни это, да? Я думаю, и вот наша валюта. Она одно колебание нефтяное, и она сдулась.
Ну да. Yeah, apparently.
Придется научиться бильярд играть.
Нет, это американский, кстати.
Американский поло и бильярд — это две разные игры, да?
Да, это русский бильярд сложнее.
Понял.
Больше шары, меньше лузы.
И стол больше.
Слабенькие американцы.
In expectation of his arrival, the president arranged a hackathon for Vitalik in hopes that he might inspire a new generation of Russian tech leaders.
So we're at a government-sponsored blockchain hackathon where Vitalik is the star guest and one of the judges.
Здесь так слышно.
This is a high-technology park that is intended to support IT industry and startups. The goal is to make an ecosystem that will produce people, that then will produce companies, that then will produce technologies. United States has approximately 2.5 million IT people working in the IT industry, very active, and Russia is just 400,000.
And a lot of your very smart Russians come to work in America, too.
A lot. The league, how we call it, the league of the brains.
But this is something that Russia can lead in.
If
you get in early with blockchain,
we hope.
That's kind of the idea, isn't it?
It is.
In 2016, the Kremlin was on the verge of banning cryptocurrency transactions. But that hostility has turned to opportunity. Putin, alongside rogue regimes in Iran and Venezuela, realized that an anonymous, virtually untraceable currency could provide an opportunity to evade crippling international sanctions.
When you were at the St. Petersburg Economic Forum, you were pulled aside by President Putin. What was that like? What did he want to talk about?
I introduced to him, what Ethereum was and what I was doing, and it seemed like he was willing and supportive of anything that we can do to kind of make the Russian economy better.
As U.S. lawmakers are working out how to regulate cryptocurrencies, Russia is making major moves to integrate it, not only in an effort to avoid U.S. sanctions, but to undermine the power of the dollar in international trade. Sergei Gorkov was trained by the FSB as a Putin confidant and currently serves as head of Russia's largest state investment bank, which was hit with sanctions by the Obama administration in 2014. He recently signed a deal with Vitalik in support of a new blockchain research institute.
Tell me why the bank is so particularly interested in blockchain.
Банки коммерческие понимают, что традиционная банковская деятельность, наверное, не будет существовать в том виде, в котором она существует, долго. Который, конечно же, не будет предполагать, что банк как банк будет существовать как сейчас.
What would you tell a country who hasn't embraced blockchain technology?
Представим, кто-то в 90-м году, или там в начале 2000-х, или в 90-х сказал, мы не хотим внедрять интернет в своей стране. Где бы эта страна находилась сейчас? Да, вот тот, кто не будет заниматься блокчейном, я думаю, через 20-30 лет тоже будет в каменном веке.
Putin is boss man. He's also a dictator. It's kind of scary, dude. Dude, what the fuck? Bitcoin, the future of finance, or fool's gold? Oh my god. Ben Shapiro. What an idiot.
In early June, El Salvador's President Nayib Bukele made a big announcement.
That is why next week, I will send to Congress a bill that will make Bitcoin a legal tender in El Salvador.
Speaking to an opulent gathering of Bitcoin fanatics in Miami, Bukele said his country would be the first in the world to accept Bitcoin as national currency.
You want some cookies?
People were shocked. Bitcoin is a cryptocurrency that's lost nearly half its value in just the last few weeks. But Bitcoin isn't entirely new to El Salvador. For the last 18 months or so, the tiny surf town of El Zonte has been running an experiment with Bitcoin. 3,000 people live here, and the only ATM in town is a Bitcoin ATM. Just before the president's announcement, I headed to El Zonte to see how Bitcoin is changing the community.
Necesito hacer unas compras ahorita, Marcos.
Sí.
Necesito $2 de huevo, cebolla, tomate, chile verde.
¿Qué más?
¿Chile verde?
Sí. ¿$1 también?
Sí.
¿Cómo fue la aplicación?
Bitcoin Beach. Sí.
This is Milton Cabrera. He's a construction worker in El Zonte who gets paid in Bitcoin. And he says it's changed his life.
Wow.
Why do you like getting paid in Bitcoin?
Lo prefiero porque igual de una manera u otra el Bitcoin Si lo recibo en cash, en mis manos, se gasta rápido. En cambio, si lo recibo en Bitcoin, puedo sacar lo que necesito y dejo aguardado un poco. En esa forma puedo mantenerme ahorrando y gastando lo necesario nada más.
What do you use Bitcoin for normally in your life?
Sí, igual lo podemos ocupar para pagar la electricidad, agua, igual poder comprar lo básico en la comida, en las tiendas, igual no tengo que estar viajando lejos, igual lo puedo hacer aquí en las tiendas, más fácil.
Are you worried that you're going to lose all your money? Because tomorrow the price of Bitcoin could go to zero.
Tal vez sí, pero igual en la forma de que uno ha conocido Bitcoin, se pone a estudiarlo, de tarde o temprano va a bajar, de tarde o temprano va a subir. Igual no tendría, sí entra un temor, pero igual si tiene paciencia uno esperando, puede subir y tal vez obtener ganancia.
How much extra money have you made because of Bitcoin?
Quizás unos $600, $700.
Wow. Bitcoin sort of magically appeared in El Zonte. In late 2019, an anonymous American donated about 12 Bitcoins worth at least 6 figures to create a new crypto economy. The idea was for everyone in this town to use Bitcoins for all their purchases. The founders of the Bitcoin Beach organization created a Bitcoin wallet, then started convincing people to use it. Is this a surf team bus? They hired locals like this guy, Roman Martinez, and partnered with Strike, an app like Venmo that lets people send each other money. So to pay with Bitcoin, I gotta get my phone out. So I have the Bitcoin Beach wallet.
Okay.
And I have Strike. But I have no money in either of them.
Let's go to receive.
Uh-huh. So you sent me $10 in Bitcoin. Yeah. Okay, so now I can send it to her by scanning her QR code.
Yeah.
Which is here. Okay. That's it.
Cold brew with Bitcoin, brother.
Cheers.
Welcome to Bitcoin Beach.
President Bukele's Bitcoin announcement was made in a Zoom call to the CEO of Strike, a 20-something Bitcoin entrepreneur in the US. Strike and the Bitcoin Beach wallet are essentially used interchangeably in El Zonte, but Strike is available nationally, and the company seems to be trying to tap into El Salvador's $4.5 billion a year remittance market. The app gives users options to send either Bitcoin or dollars to each other. When I signed up, the app prompted me to deposit money with a debit card or bank account. Sending Bitcoin was less user-friendly than dollars. So when folks in El Zonte pull out their phones to make digital payments, they aren't necessarily using Bitcoin. And whether it's the Strike app or the Bitcoin Beach wallet, there are still kinks in the system. ¿Y tú prefieres recibir su pago en Bitcoin o efectivo?
Bitcoin me sirve como un ahorro, pero hay veces que prefiero a veces así el efectivo.
Sí. ¿Has perdido dinero porque el precio de Bitcoin bajó mucho?
Sí, he perdido bastante.
¿Cuánto?
Quizás como $20.
Okay. ¿Yo puedo pagar ahora con Bitcoin o con efectivo? Su preferencia.
Pagué con Bitcoin, sí, con efectivo, ahí en su decisión.
¿Y puedo usar Strike también o no? Solo Bitcoin Wallet.
Ahorita tengo un pequeño problema con Strike, pero estoy por solucionarlo porque como que no me recibió mi correo electrónico.
Entonces ahora tengo dinero en Strike, pero no en mi Bitcoin Wallet, entonces voy a pagar con efectivo.
No, puedes pasar también, bueno, según a mí me dijeron los chicos que de Bitcoin se puede pasar Strike, pero no sé.
The Bitcoin hub in El Zonte is the ATM, and it's not just used by locals. This guy drives for 2 hours to convert his Bitcoin to cash. Have there been times when you came and it didn't work or it was closed?
Sí, la última vez estaba, parece que no había efectivo.
What did you do in that situation?
Me fui sin nada. Sí, no saqué nada. Eso pasó.
What's the biggest problem with Bitcoin right now?
La gente no cree, ¿verdad? Con tanto que ha pasado.
So Nana, I'm going to give you a very nice warning. Do not beg in chat. Thank you. Tokenway, thank you for the follow.
Abajo, ¿verdad? Y se queda uno sin nada. ¿Qué es lo que tiene que ser uno? Optimista, pues. mantenerse.
Optimista con efectivo en mano.
And especially don't beg and then not even follow. Like what?
Es lo que apostamos.
Bueno. The face of Bitcoin Beach is an American surfer who's lived in El Salvador for years. When the anonymous donor came calling in September 2019, he says he saw it as an opportunity to create new jobs and keep kids out of gangs. Now, it's bigger than he could have imagined. So you have this idea, we're going to create a Bitcoin economy. Step one. Step two is, how do you make that into reality? What were some of your early hurdles, challenges as you're sort of turning this into, harebrained scheme into something that works in practice?
For us to really make this happen, we had to introduce Bitcoin in the community and to get people to really start think, what is money? And why do they accept the dollar in their store? And what is the dollar doing over time? And we've shown, here's this community in El Salvador, people, a lot of them living in shacks with dirt floor and tin walls, and now they're all transacting on their smartphones. They're zipping around payments, much easier than people in the first world are. And so it's, I think, proven that Bitcoin
Thank you for
really
the follow,
is
Jay
the money
Marsh.
of
Welcome to the
the
stream.
poor, of the people on the lowest level of the economic ladder, and can really transform their lives.
How does it feel to be sort of the white guy who comes into this community and says, hey, we're going to set up this new economy and sort of get involved with the finances of this small Salvadoran beach town? What's that been like for you?
Yeah, I've always very much wanted to stay behind the scenes because, like you said, I'm just an old white guy surfer that's hanging out in the community, and so we really have been focused on empowering just the local talent. And they're the ones that are driving this forward. They're the ones that have taken this to the next level into something that's transformed.
He kind of looks like Tony Hawk.
And I think will transform the world.
In some ways, the contrast between the way Bitcoin is currently exists in the United States and the way it's being used in El Salvador are really striking. What's it been like for you to see the sort of these two worlds of the United States Bitcoin and the El Salvador Bitcoin?
The El Salvador version of Bitcoin was what everybody always dreamed would be possible. This was what the potential everybody always talked about there being, that Bitcoin would be the money of the poor, that it would free people from the traditional banking system, that people
Don't forget to follow so I can give you guys some free stuff.
Would finally have a voice, and we're really seeing that happen.
The anonymous donor's identity is still a mystery. I asked the CEO of Strike if it's him. He said no. Some think it's Twitter founder Jack Dorsey, who's donated Bitcoins to fund El Salvador's national surf team. His spokespeople wouldn't talk to us. The local leader of Bitcoin Beach says the donor's identity doesn't matter.
En realidad, no es una persona que no conocemos. Solo no es una persona que nosotros podemos estar diciéndole a todas las personas quién es, ya que hoy en día tener dinero, alguien quiere afectar tu vida o algo. Ahora es un boom en la comunidad, no tenemos que darle cuenta si funcionó o no. El Bitcoin se quedó por la comunidad.
You've had people here in other communities who say this is a fraud or a robbery, a trick for the gringos to take my money.
Sí, hay muchas personas aquí diciendo que es una estafa. Hay estafas en todas áreas. Entonces este solo, creo que solo las personas que tal vez no les guste el Bitcoin están empujando más para hacer creer esto, pero al final del día cuando le descargas a una persona su wallet, le pones una porción. Si Bitcoin fuera malo, yo no quisiera andar en la calle.
Sí.
No, Bitcoin está cambiando a pasos gigantes las comunidades.
President Bukele is going all in on cryptocurrency, even suggesting the country could use the energy from volcanoes to mine Bitcoin. Skeptics worry it's all just a big distraction from corruption in his autocratic government. We spoke to Bukele's Minister of Tourism about what's happening in the area around El Zonte.
Así que estamos trabajando de la mano junto con el presidente Bukele. El presidente Bukele nos está dirigiendo en este gran proyecto que se llama Surf City, que Surf City es más que un lugar, es un circuito de playas.
I see Bitcoin everywhere, on the surfboards, on the shirts. What do you think about Bitcoin coming to El Salvador?
El mundo cambió, yo también tengo que cambiar. Y definitivamente me impresionó y me sorprendió cuando voy al Zonte, a Playa El Zonte, y veo que puedo comprar una paleta o una pupusa o una charamusca, todos esos son platos típicos de aquí, a través de Bitcoin. Definitivamente la innovación y la digitalización que podemos tener en toda esta parte económica para las poblaciones más necesitadas es vital.
Yesterday you said that you use your phone to pay your light bill and your electric bill in Bitcoin. Can you show me how it works?
Sí. Tengo cuando necesito pagar mi recibo, le tomo tal vez una foto, la mando a quien me lo va a cancelar y le pago a él, a su usuario. Pongo el usuario, que es, qué sé yo, y lo envío y ahí ya le tengo pagado.
Y ya está.
Sí.
Muy fácil.
Sí.
How long, more or less, would it take you in the past to do the same thing?
Tendría que, en lo que voy en el bus, posiblemente una hora, tal vez una hora de espera en el puerto, tal vez unas 3 horas para poderlo pagar.
3 hours, and now it's just, boom, instant in your phone.
Sí.
I mentioned briefly the idea.
Did you know that the first ever movie about the Titanic starred an actual Titanic survivor? And unlike the ship, we'll probably never see the film again. Hi, I'm Erin McCarthy, and this is The List Show. Long before James Cameron's blockbuster hit theaters in 1997, there was Saved from the Titanic. This 1912 silent film premiered just 1 month after the ship sank, despite critics who reasonably deemed it way too soon. It starred 22-year-old Dorothy Gibson, a model and actress who had boarded the ill-fated ocean liner following a European vacation. After Titanic struck an iceberg on April 14th, Gibson became one of roughly 700 people out of about 2,200 on board to escape via lifeboat. Her survival story became fodder for Hollywood almost immediately upon her return home. The film supposedly mashed together real images of Titanic captain Edward Smith and the ship's launch with a newly recorded performance from Gibson. The actress wore the same outfit she had on the night of the disaster. Saved from the Titanic was a hit with moviegoers in 1912, but modern audiences will never get to see the first Titanic film. 2 years after its release, the only known print was destroyed in a studio fire. Today you can watch at least a dozen movies inspired by the Titanic saga, but none that star a real figure from the historic event. Saved from the Titanic is just one of many lost treasures I'll be sharing with you today, from irreplaceable works of art to literal pirate treasure. Near, far, wherever you are.
Bitch, just stop.
The show goes on, unlike the treasures in this video. Let's get started. We can also do a take of that where I don't sing. Though many valuable items have been recovered from the actual shipwreck, some of Titanic's physical treasures are lost for good. That includes Mary Joseph Blondel's painting La Circassian au Bain. Maurits Håkan Bjornström Stephenson, the son of a Swedish pulp baron, which was apparently a thing, brought the oil painting onto the ship with him in 1912. Though Bjornström Stephenson survived, he was unable to save his prized possession. He would later file a claim against the White Star Line for $100,000, or roughly $2 million today. If the masterpiece was indeed worth that much, it would make it the highest priced treasure lost in the disaster. On a brighter note, while the painting itself may be lost, an artist working under the pseudonym John Parker was able to conduct research and create a reproduction of it in the early 2010s. When the story of the Kelly Gang premiered in 1906, it was the longest film audiences had seen. Though accounts vary, it likely ran around 60 minutes, which would make it the world's first feature-length film. Produced in Australia, it followed the country's infamous outlaw Ned Kelly, and it won over critics and moviegoers alike. But like many movies from the silent era, it's now considered lost. No full copies of the story of the Kelly Gang are known to exist today, but a few clips have survived. In 1979, a few minutes of footage were found beneath a bed in an abandoned house. And sometime later, another film snippet was recovered from a landfill. The biggest discovery came in the mid-2000s, when several more minutes were unearthed from the archives of the British Film Institute. The incomplete movie was edited together and released on DVD in 2007. Though it does feature some thrilling scenes, viewers used to Hollywood's three-act structure may be a little lost. One of the many mysteries surrounding the Romanovs is the case of the missing Fabergé eggs. In the late 19th century, gifting bejeweled eggs made by the House of Fabergé jewelry firm became an Easter tradition for Imperial Russia's royal family. The Tsars Alexander III and Nicholas II commissioned 50 of the precious knickknacks between them. During the February Revolution in 1917, the Fabergé eggs were removed from the palace and taken to the Kremlin in Moscow. Many were later sold to raise funds for the Russian government. And today, the whereabouts of 7 imperial eggs are still unknown. It's possible that the current owners have no idea they're holding on to a priceless piece of history. Some years back, a scrap dealer found a sapphire and diamond-encrusted golden egg at an antique sale and bought it for $13,302. He eventually learned it was one of the original Romanov eggs and was valued at $33 million. As we proved in our episode on incredible yard sale finds, you should always be looking through your neighbor's junk for valuables. At their invitation, of course. Few filmographies are as widely studied as Alfred Hitchcock's, but one of his movies definitely isn't watched in film schools. His second film, a silent drama called The Mountain Eagle, wasn't preserved in the years following its premiere in 1926. But Hitchcock wasn't exactly heartbroken about it. He reportedly told Francois Truffaut,
Hello, Berto, for the people.
and he actually was relieved that it was lost. Still, even though it likely wasn't on par with his later classics like Psycho and Vertigo, The Mountain Eagle's place in film history makes it a lost treasure to cinephiles. Polish princess Izabela Czartoryska was known for collecting priceless artifacts. She founded Poland's first museum, the Czartoryski Museum, which still operates in Krakow today. But the location of her most famous treasures are unknown. In 1800, the princess assembled a collection of precious relics from the Polish royal family. The memorial chest contained 73 items, including an ivory box that belonged to King John III, and fine watches from several Polish monarchs. The royal casket was looted during the Nazi occupation of Poland in World War II, and today the whereabouts of its contents are a mystery. Spanish pirate Amaro Pargo is famous for his lost treasure. When he died in 1747, he left behind a will bequeathing a hoard of gold, silver, and precious gems to his niece. She likely wasn't too grateful for the gesture, however. Amaro didn't specify the location of his hoard, so his niece was never able to claim her inheritance. Since then, several places have been ransacked by people hoping to get rich off of Amaro's treasure. His former house in Spain and the cave he used as a hideout are both popular spots for treasure hunters, though if the bounty is there, it's never been uncovered. A famous episode of Sesame Street only played once before it disappeared from airwaves for good. In the 1976 episode, actress Margaret Hamilton appeared as the Wicked Witch of the West, nearly 4 decades after playing the character in The Wizard of Oz. During her visit to Sesame Street, she loses her broomstick, threatens to turn Big Bird into a feather duster, and wins the heart of Oscar the Grouch. It sounds like a delightful mashup of the 2 most famous children's properties of all time, but sadly, not everyone agreed. PBS was inundated with complaints from parents, some of whom complained that seeing the villainous character had traumatized their kids. The network never aired the episode again. Today, it's widely considered lost media, but some say it's still in an archive somewhere. This belief was bolstered in 2019, when New York's Museum of the Moving Image screened a few minutes of the episode at a Lost and Found event for Sesame Street's 50th anniversary. Footage was leaked onto the internet, but there isn't much hope that the full episode is ever going to follow. Doctor Who fans will be sad to hear that 97 episodes from the early seasons are lost. From the 1950s through the mid-1970s, the BBC wasn't too concerned with conserving.
Bequeathing.
Most television shows from this time were meant to air once, and storing bulky videotapes was expensive. The British network dealt with this problem by erasing old tapes and reusing them whenever they ran out of room in their archives. The BBC wiped out 60 to 70% of its programming during this era as a result, including the entire early days of Doctor Who, 253 episodes in total. It would be an easy problem to fix if some fans could just get their hands on a working TARDIS, but in the meantime, the BBC and the show's devoted fan base have managed to salvage more than half of those once missing episodes in some form. Episodes turned up in all sorts of places, including car boots, which are basically the UK's version of flea markets, various BBC departments around the world, and even the basement of a Mormon church. When the Flor de la Mar sank to the bottom of the Indian Ocean in 1512, it brought down a legendary treasure haul with it. The Portuguese ship was said to be carrying up to 60 tons of gold and 200 chests of diamonds, emeralds, rubies, and sapphires when it vanished during a storm. If found, the bounty on board would be worth billions today. Though many people have searched the seabed where the Fleur de la Mar may have ended up, with some even claiming to have found it, the shipwreck and its valuable contents remain lost. Our next episode is all about the Ice Age. Make sure to subscribe and hit the little bell so you don't get left out in the cold.
Thank you for the follow, B2K. How are you doing? Oh, I just heard myself.
When a batter goes up to hit in baseball, they have to be ready for anything the pitcher might throw at them. It might be a fastball right across the plate, for instance, or it could be a curveball. Literally. Curveballs, along with pitches like screwballs and sliders, are what's known as a breaking pitch, a pitch that curves significantly down or to the side. And these breaking pitches can be hard to hit, so much so that it's become a figure of speech to describe unexpected problems, like that last question was a real curveball. Part of what makes these pitches hard to hit, according to batters, is that they seem to suddenly move in erratic ways right before they connect with the bat. But why? Turns out the answer might have more to do with the batter's eyes than the pitcher's arm. Now, to be clear, curveballs do curve. The secret is in how they spin and something called the Magnus effect. In brief, the more spin the pitcher can put on the ball, the more they can make its path curve. In fact, in 2021, Major League Baseball cracked down on pitchers putting sticky substances like pine tar on baseballs. The extra grip lets the pitcher put more spin on the ball, which can lead to unusually large breaks. That curving movement, combined with the pitcher doing their best to make it look like they're actually about to throw something else, can trick the batter into swinging at the wrong place or time. But even so, the ball is still flying in a continuous arc. They don't make sudden jumps. To explain why they seem to do that, we need to look at the batter's eyes. For instance, in a 2010 paper, scientists looked at how different parts of our eye process images differently. They set up an experiment where they asked people to watch moving images with different parts of their vision, either directly or through peripheral vision. Objects we look at directly are captured by the fovea, which is an especially accurate area of the retina. The scientists found that if you were looking at something with your fovea and then switched to peripheral vision, a moving object could seem to jump. This might happen in baseball if the batter loses focus. Gotta keep your eye on the ball, as they say. But it might happen naturally, as the ball comes closer and takes up more of your field of view than the fovea can capture. Or because an optimal strategy for batters is to track the ball until the very last second, then shift focus away from the ball to where the bat and ball will meet in instead. That split-second change of focus might result in your eyes seeing that jumping illusion. This effect might be compounded by your brain trying to compensate for the sudden loss of visual precision by predicting where the ball is based on past information. But those predictions might not always be accurate. The researchers in that 2010 paper say this could potentially explain why things in motion may seem to slow down, shift position, or curve.
I gotta pee real quick, guys.
I'll be back. In a short amount of time, like aircraft landing strips. Maybe there's a bigger lesson here. Like the next time life seems to throw you a curveball, it might be worth pondering if things really did get screwy or whether it was all an illusion. Or maybe the lesson is just that playing professional baseball is harder than it seems. Thanks for watching this episode of SciShow, and thanks to our patrons for stepping up to the plate. You guys knock it out of the park every time. If you'd like to join our team, you can sign up at patreon.com/scishow.
Honey. You've met honey. It's that sticky sweet stuff. Basically just slightly liquid sugar in a plastic bear bottle, right? Wrong! Honey is a supercharged bacteria-killing powerhouse, and it's all down to what those hardworking bees put into it, from immune proteins to the sugar itself. Since ancient times, honey has been used to prevent wounds from getting infected, and these days we use purified and standardized versions of honey to fight infections in hospitals. Honey has three main tricks for fighting bacteria. The first is all that sugar. Honey is only about 17% water. Most, but not all, of what remains is sugar. The two main types of sugar in honey are glucose and fructose. Like all sugars, glucose and fructose are sticky. They attract water. Honey is technically a supersaturated solution, meaning it contains more sugar than would normally dissolve at that temperature. That's why it eventually gets all crystally in the pantry. Over time, the sugar comes out of the solution. Chemically speaking, it's desperate for water. Water can travel across cell membranes from where there's a higher concentration of water to where there's a lower concentration. And there's a higher concentration of water in a bacterium than in honey. Which means that honey will suck the juices right out of any bacterium or mold or fungus that tries to set up shop. Plus, there isn't enough water in honey for any microorganisms to live on, so they die and the honey doesn't spoil. The second thing is that when bees make honey, they throw in an enzyme called glucose oxidase. And bacteria hate glucose oxidase because it produces two different compounds. It converts glucose to gluconic acid and hydrogen peroxide. Gluconic acid is, you guessed it, an acid. It gives honey a pH value of less than 4. That's about 1,000 times more acidic than the neutral pH of 7 that most bacteria need to grow. And hydrogen peroxide is very good at killing cells. It destroys the cell walls of bacteria, which breaks them apart. Glucose oxidase isn't active in ripe honey. There's not enough water for it to work properly. It seems to be there to keep the honey from spoiling while the bees are drying it out. But if you dilute honey, the glucose oxidase will switch back on and make gluconic acid again. The final thing bees do to make honey antibacterial? They put antibiotics in it. Some types of honey contain a protein called B defensin 1, which is exactly what it sounds like. B defensin 1 defends bees. It's part of their immune system and protects them from certain bacteria, including ones that cause nasty diseases inside the hive. It's produced in a gland that bees use to make honey, so it makes sense that some of it would make it into the finished product. And while scientists aren't sure how much of the protein really is in honey, it sort of makes sense that bees would use it to protect their food. Another antibacterial compound sometimes found in honey is methylglyoxal. Methylglyoxal is a small organic molecule that forms in honey from a compound in the nectar of certain flowers. There's an especially large amount of methylglyoxal in Manuka honey, a honey made from a New Zealand flower. This honey is so good at killing bacteria that it's actually used in hospitals. There's one bacterium that has honey's number, but only sort of. It's the type of bacteria that causes botulism. The bacteria start out as spores, which are very hard to kill. They're already dried out, so honey's water-sucking properties don't kill them, and because the spores aren't growing, they aren't affected by the acidity or the antibiotic compounds. The really dangerous part of the bacteria is the botulinum toxin they produce when they grow into mature bacteria. Less than 100 nanograms, that's billionths of a gram, is enough to kill an adult. About 10% of honeys have some botulinum spores in them, but since the spores in honey aren't growing and making toxin, they're harmless to healthy adults. Our immune systems intercept the spores before they can start growing inside of us. But the immune system's of infants aren't always able to kill those spores before they start growing, so in rare cases the bacteria can germinate and start producing toxin. That's why it is not safe to give honey to infants under 1 year old, but the rest of us do not need to worry about it. So the next time you're looking for something sweet, go ahead, eat some of bacteria's worst enemy. Thanks for watching this episode of SciShow, which was brought to you by our patrons on Patreon. Thank you so much to all of those people. If you want to be one of those people, you can go to patreon.com/scishow, and if you just want to keep getting smarter with us, you can go to youtube.com/scishow and subscribe. We really need bees. The U.S. Department of Agriculture reports that honeybee population is responsible for more than $15 billion in crops each year. Humans love sweet things. We've evolved to value sweet foods when we come across them. But in a relatively short amount of time, we've learned how to make things sweeter artificially. In some ways, this is obviously amazing because it's delicious. But in terms of our health and the science of food, it's been confusing. Our brains still think we're getting sugar even when we're not. And we can be a little bit judgy about what we think sugar does to people's behavior, especially kids. So to give some more context to what we know about humans and sweetness, we wanted to put our videos about sugars and sweeteners together here in one place. First, from one of our earliest SciShow videos, why do we love sugar?
This, my friends, is your run-of-the-mill table sugar. It's made either from sugar beets or from sugar cane. There's no way to tell which. But henceforth, we're going to be calling it by its proper name, which is sucrose. There's a bunch of different kinds of sugar, but they're all sweet-tasting, edible carbohydrates. Oh, carbohydrates! Probably the tastiest word in the English language. And aside from filling up your snack hole and making your kids get all spazzy, sugar is one of the most important chemicals on the planet. They're pretty much the primary source of energy for everything on Earth. Not this stuff exactly. This stuff is more the primary source of all cavities on Earth. At the cellular level, pretty much every living thing on Earth, when it needs an energy fix, whether it's a plant, an animal, or a bacteria, the first thing they turn to is sugar. Now, where does sugar come from, or at least where does the energy used to create sugar come from? That, of course, is our friend the sun. These lovely sweet compounds are found in every single plant, though in vastly varying quantities, of course, because it is the primary product of photosynthesis. But for now, let's just say that the importance of plants turning carbon dioxide and water and sunlight into sugar cannot be overstated. Basically, plants use energy from the sun to split molecules of water, and the hydrogen from that water is combined with the carbon dioxide to create glucose. So in effect, this whole process captures the energy of the sun and stores it as chemical energy in sugar. I'm eating the sun. I'm eating the sun right now. It's under my tongue. Problem. That was a lot of sugar. I'm worried I'm going to have a stomachache. In addition to glucose, another common plant sugar is fructose, which has the same chemical formula. It's just rearranged a little bit. And even though they're very similar and contain the same amount of energy, fructose actually tastes significantly sweeter, which is why we like to put high fructose corn syrup in.
Alright, we're switching over, guys, to Pokemon Go in just a second.
To not sweet at all potatoes, which is what we generally call starch.
Hello, Trust Baby. Ying. Hello.